Good morning, everybody. I'm a couple minutes early. That's okay, though. How you guys doing today? Sydney, good morning. Ron, Jim, all you guys. Chris, good to see you. Guys, I dropped that 7 habits of a highly successful trader. Good morning, Sean. Into the room. Um, I can teach you to read indicators all day long, right? The brain stuff you're going to have to work on. So, good morning, Chef. Good morning, Sydney. And man, it's just a great read. Good morning, PFI. Dwight, good to see you guys. That 7 Habits of Highly Successful Traders, it's written by the late Mark Douglas. Absolute guru. Good morning, Snorri, Bobby. In terms of the psychology of trading, and there's a lot of great stuff in there. There's also videos on YouTube. If you're not much of a reader, you can sit around and listen to them. Good morning, Gary. But I'm going to tell you one of the things that John told me when I started trading, and of course I didn't do it because I'm so damn smart, is he said, just read this book every day. He goes, take 30 days, read it. It's not that long of a read. It'll take an hour of your day, maybe. Um, and he goes, and just let the messages sink in. Let the messages sink in that consistency is key, that execution is key. It's a great read, guys. Um, I think it'd be fun just to everybody read it and we'll have a discussion on it one day, like you guys write book reports or something. But I wanted to drop that in the room. And then, guys, we're going to do yesterday what we did, or we're going to do today what we did yesterday. And today is also going to look a lot like the day before. And everything that I do in this classroom, every day, guys. Good morning, D-Rock. Um, Love that green next to your name. Congratulations. Welcome to the family. Um, What you're going to find, and Big Al, you too, welcome to the family. I heard that you jumped on board as well, guys. That makes me excited. That makes me so excited. Because now you're committed, right? Now you're in 100% skin in the game. Let's make this happen. So remember, buying software doesn't make you a great trader, guys. It's these repetitions that are going to make you a great trader. So we're going to talk about your path of least resistance to get there. I got an awesome message last night from somebody that spent the last month or so learning to read the indicators, and just found their groove, found that one thing that stuck out to them like a sore thumb, and capitalized huge on it, and gave them this amazing idea um, of where their trading was headed. And it was based off a chart reading. It was based off of a very simple plan so that they could formulate a plan that fit their needs. And that's exactly what we're going to do in this room, guys, is we're going to keep it super simple. We're going to focus on a foundational learning approach. But before we do anything, this is the first thing that I do every day as I come to news. Is anybody watching at 8:30? News can move the market, guys. It can make it jump and bump and spike and reverse. It can make it move so fast that you don't have time to process what's going on. So understanding where news is being released, and I look for these high impact. I also look for medium impacts because medium impacts can make a little movement in the market. But I'm really looking for these red boxes, and when I see them, that is my cue to sit on my hands or go toast a bagel, right? Do something um, that isn't being in front of that potential freight train of emotion, guys. And I do this every morning when my charts are loading. I've got it saved right here. It is my first link in my tool in my bookmark bars. It doesn't, D-Rock, nothing. The probabilities are all dependent on the patterns, right? But D-Rock, if you take your favorite movie and you're like, you know what, I'm going to quote along with the movie. But then you run it at 1,000 times speed or 100 times speed, you're never going to be able to quote along with it, right? It's still the same movie. It's still all that, right? But it's just too fast and it's chaotic when news hits. Because remember, guys, that there are two opposing forces in the market. There are buyers and there are sellers. And when the core retail sales came out, the buyers had a predetermined reaction for how they were going to react if it was good and how they were going to react if it was a poor report. And the sellers had the exact same thing. The challenge is those two may conflict. Or the typical buyer says, normally I buy 1,000 contracts here, but if it's good, I'm going to buy 5,000. And what that does is it spikes the market and just boom, it doesn't matter what's going on initially. So just avoiding that chaos is awesome, I think. And then I love to trade just a minute or two after when it becomes readable again, because I think that you can catch some pretty big moves, or you can get caught in some just absolute ugliness. And let me show you why I do that. That's crude oil. Let's go to the NASDAQ at 8:30. And it wasn't horrible, but there was a huge spike all the way down, right? And probably too fast to catch something. But the huge spike came from three divergences. The patterns were the same, right? It was still Fibonacci support that made it bounce. It was still odds favorable momentum that pushed it down. It was just probably too fast. Too much going on in too short a time to make it easy to discern whether or not your rules were met. So just that awareness helps a lot. And I do that every morning, guys. I look at it and just make sure. It's just one more safeguard, guys. I'm such a huge fan of staying safe, such a huge fan of not taking unnecessary risks with my money. Um, and then everything that I talk about, good morning, George. Everything that I talk about comes from the education page, guys. There's no secrets with Nexgen. And I can't stress that enough because I know there's a lot of services out there and not necessarily trading services. Any services, right? They're like, hey, download our app and get free XYZ. And then once you download their app, they're like, cool, now all I need is 50 bucks so that you can actually have what you thought you were going to get. And we just don't do that here. Your entire plan for success can be found inside of the education material. I'm going to give you everything that you need to learn how to read your indicators. Guys, the only thing that NextGen doesn't provide you is repetition, is experience, and that's going to be on you. The more you study, the more you participate, the more you post in class, guys, you're building experience, and experience is what makes day traders. It's not purchasing software, right? It's not secret handshakes. It's just doing the same thing over and over until it becomes easy. So there is a step-by-step process to becoming a confident trader as soon as possible because we all want to be there sooner than maybe later, right? Post your trades in class. So if I have new people in this room, post your trades in class. No secret handshakes, John P. There's a pretty clever high five at the meetings, but no secret handshakes. Um, the people that post the most, oh, thank you for that, Chef. And you guys know that I'm not in sales, right? Not at all. I don't get a thing if you guys buy software. I love teaching it. I love teaching, and I'm very passionate about teaching. And it's easy for me to teach because I believe in the software wholeheartedly, guys. I'm betting my entire retirement on it. And I trade almost the exact same plan that I teach in this class. There's a couple deviations, but I don't stray too far. But if you post your trades in class, I know what you're thinking. If you post your trades in class, I can see what you're doing. And guys, the magic of NextGen and this education is the feedback that you get. And I'm not gonna lie, sometimes feedback's gonna hurt you a little bit. You're gonna get a little butt hurt. Man, I thought I did that right, and Mark said that I did this, and well, that hurt my feelings. It's okay, guys. Work through it. Get over your feelings. Trading isn't about feelings, right? My goal, my only goal is to get you to where you want to be. So post your trades, guys. Let's have a conversation about everything that you do. And the person that posts the most really does get to where they want to be the fastest. And then use that spreadsheet. And guys, one of the reasons that I teach this class, let me share a story with you new people that you may not know this. In January of 2020, I had my second spine fusion. I had screws and rods put in my back. Um, had part of another disc taken out, and I was recovering. But what I realized is that my 30-year run in the service industry was over. I wasn't going back to the restaurant industry, and I loved it. I enjoyed it. I was good at it. And I had to do something else. I didn't know what I was going to do. And John said, all right, it's time for you to learn the software. And I said, you know what? You're right, John. It is time for me to learn the software. And I'm not lying. He sent me this picture. And he said, this is all you have to do, Mark. I need you to take pictures of your rules being met. I need you to learn the rules. I want you to post them in the room. I want you to post everything that you see in the room because John was teaching the classroom at the time. And then he said, I want you to use the spreadsheet. Just throw all your pictures in there and study it a little bit every morning. Guys, it's pretty simple, right? I can say this all day until I'm blue in the face, but if you're anything like me, you are so smart that you don't need to take all those pictures because you remember, right? And you don't need to use that spreadsheet because it feels like a lot of work. And that's how I felt. So I spun my wheels for 3 months. And I tell you guys this story because, Chef, you're brand new. You can avoid the pitfalls. Big Al, you can avoid the pitfalls that I went into by following this plan. And after 3 months of really going absolutely nowhere and understanding nothing, because I would only post winners in the room and I would hide my losers, I decided to go live. I decided I had about 7 grand in an account. And I was like, okay, I'm ready. I've had the software for 30 days. I'm brilliant. I'm gonna go live. And guys, I was separated from 5 grand in one day, 22 trades. And I had absolutely no idea why I lost them. I didn't even know why I entered them. And I certainly didn't know how to manage them, even if I did luck my way into the right entry. 5 grand almost instantly. Um, and I hated it. And I hated trading and I hated my brother. And it was so frustrating. And then John didn't get mad and he didn't make fun of me and he didn't say, well, I told you this was going to happen. What he did is he said, all right, are you ready to follow the plan, Mark? Are you ready to do it right? And I said, you know what? I am. Because I'm not a quitter. I probably should be at some things in life, but I'm not a quitter. So I started posting my trades in the classroom, guys, every day. And what I did is I realized how many problems that I had that I didn't realize that I had. And I started using the spreadsheet. And true story, I filled up on the tracking sheet 3 spreadsheets, 280 posts each, all the way to the bottom. 3 times over, I filled up my trade tracking sheet um, so that I had an idea of what my problems were and what my successes were. And guys, I'm telling you, I'm pretty good at this now. And once I learned to read my indicators, once I simplified, once I wrote a plan and wrote rules, I started teaching a 101 class in the afternoons. And the 101 class is the first hour of this class. I was taking brand new users just like you, and I'm saying, guys, I'm not that far removed. Let me show you how I screwed everything up so you don't have to. So my education comes from a place of I don't want you to make the mistakes that I make. I want you to keep it simple like I didn't, and I want you to post in class so that I can give you the feedback. Um, D-Rock, just simulate. It's okay. Just simulate. Get on that simulator and break everything. Man, screw everything up. But post those pictures because the conversations that you and I have regarding the pictures that you show me while you're making mistakes are going to keep you from making those mistakes a little later on. So, guys, the spreadsheet is designed to be a trade journal. Every time you take a trade, win, lose, or draw, it goes into the spreadsheet. You're going to drop a link in there. It's going to talk about how you felt, what the trade was, what the conditions were, and then these notes are going to talk about what happened. You're going to look at it every morning. And guys, I want you to commit to this little 3 to 5 minute exercise each and every morning. Study the previous day's trades. Look at what you did the previous day. Sydney, I don't know what that is. What worked? Like, who had a trade yesterday that worked? I can tell you guys, I took a trade yesterday where every indicator on every chart agreed for the trade, and it was the easiest win that I took all day. And then what didn't work? Maybe you fight trend. Maybe you fight momentum, right? Oh, okay, cleaning the keyboard. That's awesome. It's like Sydney's got drunk fingers. Here we go. Guys, what's easy? What keeps you relaxed? Having advantages keeps me relaxed. And then when I start to break my rules, that's when I get nervous, guys. But that little study each and every morning, it's going to prepare you for the day and it's going to accelerate the learning. I guarantee everybody in this room made at least one mistake yesterday, right? I don't think I ever have a day where I don't make a mistake, whether it is a stop just a tick or two in the wrong spot, getting in a minute or two early, right? Getting in just a little bit late. And sometimes, even as good as I am at reading the indicator, sometimes I get married to an idea and I take the wrong trade, right? It's totally normal. Hey, Lady P, welcome back. So guys, if you go through and you look at these, you can say, all right, I messed that one up yesterday. I'm still a great human and I'm still a good trader, but I'm going to try to do better today. So that's really your path, guys. Post those trades, use that spreadsheet, let repetition create recognition. And we're going to take this first hour and we're going to learn the Fibonacci rules for when it's okay to trade. We're going to learn a very basic set of rules, and those basic set of rules are going to be for a high probability trend trade. And PFI, I hope you're being silly, guys. I hope you're never afraid of my feedback. I try to be pretty warm and fuzzy. I really do. Um, Guys, we're going to focus on a high probability trend trade. And a high probability trend trade is when every indicator on every chart is going to agree with the trade. You're going to have the strongest triggers. You're going to have a clear path. You're going to have the best entry. And this is a trade that typically wins 70 to 80% of the time. This is a trade that is your foundational trade. And this is the trade that's going to make you a chart reader. I want you all to become chart readers. I want you to be able to look at your charts and understand where the market is likely to continue. And then that becomes where you're going to enter the market for that high probability trend trade. And then eventually, you're going to understand where the market is likely to go through your chart reading. And this is going to take these very basic management approaches that I give you in the classroom and allow you to capitalize, to make more money, to understand when it's okay to hold for bigger moves and when a base hit is more appropriate. And then finally, you're going to understand where the market is likely to stop. And guys, I want you to understand that these Fibonacci areas on your chart can reverse the market. They can create indecision. Likely to go and likely to stop? Very much so, D-Rock, to be honest with you. So likely to go, I want you to imagine, or you don't even have to imagine, if everything is super strong as you come into an area, let me see if I can find an example where it's happening. If everything is super strong as you're coming into an area, it still creates a bounce. But when you get to a point in your trading, D-Rock, where you're trading 5, 6, 7 contracts, you might take 5 of them off at that key Fibonacci area, but because of the momentum, you might say it's likely to go to the next area. I'm going to let one of those run, and I'm going to capture that extra $500 or $600 on this trade. So likely to go creates targets, right? If you were long from this blue fib, likely to go is that yellow 1-to-1. And you're absolutely right. It's also where it's likely to stop. And how smart would you look to take profits a tick below the pivot high? And guys, that's what we do in this room is we understand these basic concepts. And you're going to learn how to use them. So likely to go becomes a great target seeker. And likely to stop becomes a great spot for you to not take any more trades into the area that may create a reversal or a huge bounce. But it also behaves, these termination conditions behave as an anchor for the highest probability trend trades you can take. When this trade that we're teaching in the first hour happens after a termination condition, and let me show you, when it happens after a termination condition that reverses the whole market, guys, you're going to learn by the end of the day, actually the first hour, how to identify this spot right here and get paid all the way up to that area where the market is likely to go. And that's what we talk about every day. We talk about this one simple trade, this one trade full of advantages, guys. And if you allow it to be your foundation, if you become a chart reader, you will be absolutely floored at what you're capable of pulling off in the market. So let's go. We're going to learn those trigger lines. And then D-Rock, that one's for you. Good morning, Sofia. Going to simulate our trades, guys. Every day, just practice. Practice, practice, practice. Imagine that your simulator is the batting cages or it's the driving range, right? When you decided to learn golf, you're not going to say, I'm going to watch videos until I'm so great with all the concepts before I ever swing a club. You're just going to go to the driving range or you're going to go hack up a golf course somewhere, right? And you're going to learn along the way. And that's exactly what the simulator does for you, is it allows you to learn with zero fear of losing money. Guys, you can't lose simulated money. It's monopoly money. Um, Monopoly money should make you brave. but you want to practice the correct rules because it is monopoly money, and having an abundance of it does not make you a great trader. It doesn't make you popular in social circles. We want to build repetition and muscle memory for always taking trades that have advantages. And then I'm going to ask you to simplify. You don't have to. I'm only asking, I'm not telling. But I'm going to ask you to simplify. I want you to keep it simple. We're going to talk about a high probability trend trade, guys. That's as simple as it becomes. That's the most basic trade that gives the most advantages, that wins more than it loses. And what a great foundation for a trading plan. I'm also going to introduce you to what we call a 50-50 trade, which is a trade where maybe one of the advantages isn't quite there the way we want it to be, so we can focus with our chart reading to recognize it, to manage assertively, to be very aggressive on our profit taking when things aren't perfect. And we're just going to rinse and repeat every day. Every day I'm going to talk about this. And guys, I promise you, I sound like a broken record. If you've been in my class for a month, you've heard this first hour almost verbatim for the month. My second hour, my third hour, that's driven by you guys. That's where the lecture becomes a conversation. That's where your pictures spark amazing lessons. And that's where I want you guys to keep me flooded with pictures so that we can always talk about these things that you need help with. But let's start with the high probability trend trade, guys. It's only 3 rules. Each of the rules for the high probability trend trade is going to create an advantage. And it's the 3 advantages together that create a trade, guys. It's not the other way around. A trade isn't hoping that it has momentum or wanting it to have a clear path or kind of jumping in and seeing what happens, guys. A trade is a culmination of momentum, a clear path, and an entry area. And these 3 advantages happen on only 2 charts. Keep it simple, right? Don't focus on too much in the beginning. Your large chart, guys, this is a broad stroke of a brush. This is your highest time frame. It's a slower moving chart, but you'll be able to determine direction, momentum, and areas on just one chart. Your first 2 out of 3 rules must be true on this large chart. And when they are, you will have the advantage of momentum and you will have the advantage of a clear path. But that's only 2/3 of the equation, guys. We have to take these advantages and then we're going to focus on the small chart. And your small chart is going to take that momentum and it's going to take that clear path and it's going to refine it down to a single window of opportunity, to the area where the market is most likely to continue. And rule number 3 are going to be your entry areas. And you're going to be so good at pinpointing where the market is likely to continue that you will literally wait for it with a limit order. You're going to wait for the market to come to you. We don't chase trades. And by doing so, you're going to increase your profit potential and you're going to reduce your risk, guys. But more importantly, you're going to teach yourself to read your charts and you're going to have confidence through the memory of success because this is a trade that typically wins 70 to 80% of the time. So we're going to go to the rules and we're going to talk about them. And the first rule is all about momentum, guys. The first rule is all about having the advantage of momentum. And rule number 1 says that you have to have strong triggers on your large chart. I'm going to tell you right now, you cannot have strong triggers if you're fighting the trend. And that's one of the little safeguards put in place, guys. You can't have strong triggers if you're fighting the trend. And I want you to see how easy identifying the trend is. If the background on your large chart is green, you're in an uptrend. That's it. You should only be looking for rules to be met for high probability trend trades long. It doesn't mean go long. It doesn't mean buy the market. It means you're looking for your rules to be met in the direction of that trend. And if it's red, you're in a downtrend. And if we're in a downtrend, we're only looking for rules to be met for high probability trend trade short. That's your first safeguard, keeping you from forming opinions and simply going with the flow. And let's ask, guys, this is NASDAQ. Are we in an uptrend or a downtrend? Especially you new people, let me know because I want you to feel great about how quickly you're learning this first concept. You're in an uptrend, absolutely. So we're only looking for rules to be met for long trades, right? Uptrend or downtrend on the S&P, guys? Just an uptrend. How about crude oil? Down. My gosh, you guys are brilliant. Isn't that easy? So you're only looking for rules to be met to go with that trend, guys. And then once you have it, let's make sure we have strong trigger lines. There's two parts to gauging momentum, guys. There are small triggers, which are these solid lines, and there are large triggers, which are these large lines. Guys, it's not four lines. I don't want you to think of it as four lines. Two lines create a small trigger. Two lines create a large trigger, and these work together to gauge the momentum in the market. I'm going to delete your first one, Sean, just so I don't accidentally get it. I hope that's cool, since you wanted me to ignore it. And this is me getting distracted. Cool, there we go. I do that sometimes, guys. Squirrel. So when your small triggers break above the large triggers, guys, this is what creates that uptrend. This is what lets you know. This is what paints the background green. But it's when they break above completely, that separation between small and large, that space between the two, that's when we have a strong trigger look. And strong triggers last from the point of separation until they return. But when you have strong triggers, the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum is going to be something that you hear in classroom all the time. And you're going to see it on charts, on people's charts all day long. OFM, OFM. I had OFM, right? And when you have that strong trigger look, when you have that odds favorable momentum, this is the absolute most favorable look for buying pullbacks to Fibonacci support on a smaller, faster chart. On your large chart, we're only using one bar. One bar is going to define your trend. One bar is going to define your momentum. But you're going to see these tails if you scroll back on your large chart. These tails are little retracements in price, hopefully back to Fibonacci support inside of favorable large triggers, and you will be able to pinpoint where the bottom of this tail is most likely to form, and that's going to become your entry, that point where the market is most likely to continue. D-Rock, in order to really have the advantages, it should be green. Like if it's a long trade and this chart is absolutely screaming up, your two charts should agree very much. But there will be times where maybe possibly on that smaller, faster chart, it does turn red. But remember that we're using a large chart. And I say this 1,000 times a day, and it took me a long time to accept it. Your large chart defines direction, your large chart defines momentum, and your large chart defines areas. Your small chart is nothing more than an entry chart. So we're only using that entry chart to figure out where this little tail is likely to form, and that becomes our entry. But we're letting the large chart lead the way. We're letting the large chart dictate that trend, that momentum, and ultimately the areas. Great question, man. Keep your questions coming, please. Because if you're wondering, 10 other people are wondering as well. So I appreciate when you guys post in the room. And then guys, smalls below the large. Large are wide, they're angled in the direction of the trend. That separation lets me know that the odds are favorable for the market to continue in the direction of the trend. And guys, this is your best look for selling little pullbacks to Fibonacci resistance. They look like tails on the large chart. So this is your strong triggers. This is rule number one visually, exactly what it means. And if I go back to the live market, do I have odds favorable momentum on crude oil? What do you think? My smalls are below the large are wide, they're angling. Can we say absolutely? There's a lot of momentum in the market. Pretty easy. Look at that momentum there, and the market continues to push up. Momentum there, and the market pushes down. Momentum once again, and that market pushes up. There's one of those beautiful little tails, right? We find our opportunities when the momentum is the strongest, guys, and it isn't hard to recognize. And here it is, looking at the first bar. We know we're in a downtrend. Our small triggers are below the large triggers. Guys, that is rule number one, live in front of you on the NASDAQ. And that's the look that gives you the best of the best advantages. Sometimes you don't, D-Rock. Sometimes the money in the market just isn't yours. And that's okay. One of the hardest things you'll ever do as a day trader is absolutely nothing when your rules aren't met. And you're going to develop this trust in the rules, so much so that you're going to demand that they be met because they create a statistical advantage. So guys, here's that odds favorable momentum. Here's that odds favorable momentum. And I want to show you what the opposite of odds favorable momentum is. When the smalls work their way into the large, those are weak triggers. Those are trigger lines where anything can happen up or down, guys. Your advantage of momentum goes away. And weak triggers typically precede a reversal. As the market comes into Fibonacci areas, you'll see those trigger lines weaken. It absolutely strips you of the advantage. And Snorri, your timing is the best timing ever. Look at those weak triggers coming into fibs, and look how the market reverses. And you're absolutely right. We're going to talk about that one when we get into termination conditions. But weak triggers remove your advantage, guys. Weak triggers mean anything can happen up or down. And what you're going to find throughout the day, and I'm going to share this picture with you. That's okay. We'll talk about it every day, D-Rock. We'll talk about it every day until you get it. And when we get to termination conditions, I'll cover it a little bit today as well. Let's get through momentum for all my new people. You can see the separation on the far left. And then you can see how the small work inside, those anything can happen triggers, and it precedes a reversal. From the reversal, we get odds favorable momentum. There's one of those tails, and the market continues up, right up until we get weak triggers again. The market reverses, and there's that odds favorable momentum, guys. That little bit of patience, waiting for the advantage of momentum, is going to keep you out of a lot of problems. Sometimes the market is going to be indecisive. Sometimes buyers and sellers are going to fight one another, dukes up, brass knuckles, drunk in a bar, and your trigger lines are going to show it. Your large may be down when your smaller up, or your trend may be up, but your triggers are down. This is where Nexgen users avoid consolidation. This is where Nexgen users don't get caught up with opinions. New users typically try to predict whether the market's going to go up or down. They say things like, well, the background's green, and even though I don't have odds favorable momentum, I'm going to try along, and sure enough, they get run over. And it's not uncommon, if you avoid momentum, to get run over 3 or 4 times in these moments of indecision. So now just sit on your hands and wait for it to sort out, because ultimately it will come back to that odds favorable momentum look. Is everybody cool with rule number 1? Strong triggers, guys. It sets the tone. It gives you the advantage of momentum. And really, it should be the first thing that you look for, because momentum fixes mistakes. I'm going to tell you that right now. Momentum will open doors for trades very much as you learn to trade. Once you have a clear path, once you have momentum, excuse me, you have to make sure that there's nothing in your way, that there's no areas likely to stop the market. And these are those termination conditions that we talked about. And this one I like to go to the user guide. Areas that may reverse the market, guys. There's lines on your chart that we're going to respect. And those areas can be Fibonacci supports. They can be Fibonacci resistance. They can be yellow 1-to-1s. They can also be a cyan divergence line or a magenta divergence high line. Whoops, excuse me. I want to pull this up in front of you here. These are areas that may reverse the market. These are also areas that can be broken with momentum. So there's a simple recipe for you guys to determine whether or not an area is likely to stop the market. And we're going to use those same trigger lines that we used for momentum. We're going to look for divergence highs. And guys, a divergence high means that there was a loss of momentum in the market at a pivot. We're going to look for divergence lows, these cyan lines. And once again, if the market goes down and then up, there's a calculation that happens that says that momentum isn't following price. And price is these bars. These bars reflect the current price in the market. We're going to use red Fibonacci resistance, blue Fibonacci support, yellow 1-to-1s. And in some cases, in D-Rock, this goes back to that gap theory. We're going to use the midband on the large chart if those large triggers are a full bar away. So rule number 2 will give us the advantage of a clear path, but we have to go through the process of the recipe to figure out whether or not an area is likely to hold. are likely to break. And everything begins with price reaching the area. And I'm going to encourage new users. Price reaches an area. What does that mean? That means that these dynamic Renko bars come down and they reach a Fibonacci support, a Fibonacci resistance. They reach a yellow 1-to-1, a divergence high, a divergence low. And we go with the idea that price reaches an area because these areas are reaction points. And I woke up yesterday thinking about termination conditions very much. And I want to share this with you guys. This is a fib. And this white arrow is price. And when price reaches a fib, this is where decisions are made, guys. This is where buyers and sellers, the people that control the market, decide whether or not they want to take profits, whether or not they want to unload, or whether they want to buy a whole bunch, or whether they're just going to fight it out. And what next-gen users have the advantage of is we know exactly where these areas are long before we ever get them, areas where the market is likely to go. And there's three things that are going to happen at these areas, guys. They're either going to break, never even make the market flinch, and that typically happens with that odds favorable momentum. Buyers and sellers are going to fight right at that blue area, and you'll see that consolidation. Or the other side's going to take over, and it's going to reverse the market and rocket it the other direction. So there's three options, but what I want you to accept is that these areas that can stop the market are where the people that move the market are making decisions. So when we reach them, price reaches the area, it does, Chris L. And let me talk about that in just a second. Let me go through terms. Don't let me forget. Let me go through terminations, and I'll talk about what the different lines on your large chart mean, but we respect them all the same. Let me say that very loud. We respect them all the same, and we respect them using the recipe for termination conditions. Price reaches the area. Your price bars get to the decision-making point. When price reaches support, if all of your trigger lines, if your momentum indicators remain above that area of support, that area has the potential to stop the market. It has the potential to reverse the market. It has the potential to create an untradeable bounce. This is a textbook termination condition, guys, and this means that the path isn't clear. Rule number 2 isn't met. Is everybody okay with that idea? Price reaches the area. If it's support and the triggers remain above, this is a termination condition. This may reverse the market. And I'm going to go through and I'm going to look and I'm going to show you. Price reaches resistance. All of the trigger lines remain below. This is a termination condition. This may reverse the market. No more long trades. Price reaches these yellow 1-to-1s, even with odds favorable momentum. All of my trigger lines remain above the area. Therefore, we're not looking for those short trades into the area. Guys, give me a Y in the room if you're okay with this simple little idea. If price reaches the area and your triggers haven't gone through, sit on your hands and do nothing. Let those guys figure out what they're going to do. We don't have to guess, right? Here's your simple picture. Price reaches, no triggers through, it's not broken, there is no clear path. It really is that easy, guys, in the beginning. Allow it to be. So what is a clear path? A clear path means that both your small and your large triggers get to the other side of an area. You'll see that resistance begins to act as support when that happens. You can see that when the small and the large get through an area, we now have a clear path. And couple it with odds favorable momentum, there's one of those little tails, one of those potential entries. And guys, I want you to let it be this simple in the beginning. Let it be so simple that either triggers are through or triggers are not. The path is clear or the path is not. Let it be basic, and there's going to be more options as you grow with the software. But in the beginning, what we're going to do is if price reaches an area and the triggers don't break, we're going to sit on our hands and we're going to let the large group of people that move the markets make a decision. If your small and your large triggers get to the other side of the area is now broken and the path is now clear. And do you see how in this picture, when the trigger lines break through, I have room to that next Fibonacci area. I have odds favorable momentum, and there's one of those pullbacks. There's one of those tails. And notice that it comes right back to resistance that was once support. And that's your clear path. So guys, give me a Y in the room if you're okay with that. No triggers, no trade. Both triggers, the path is clear. And then D-Rock getting just a step ahead of me, which I love because it means that you're paying attention every day. There's going to be the option where areas have the potential to break, right? Because they can't always hold, otherwise the market would be caught between two fibs for the entire day. So let me introduce you to the third option, guys, and this is going to be your first trade outside of that high probability trade. When your small triggers go smashing through an area with odds favorable momentum, and that is the key part of this one, guys, with odds favorable momentum, because strong triggers break things. This is what we call a 50-50 look. And a 50-50 look is not a commentary on your odds of success. A 50-50 look just means that 50% of your triggers have broken through the area. It has the potential to break with all of that momentum, but 50% of your triggers have not. Therefore, it's not a clear path. It's not a clear path to the upside, guys. It only has the potential. That clear path only shows when both the small and the large. But when you have this much momentum going into an area, guys, I'm going to give you a set of rules where you can look for opportunities to take that pullback, to go with the trend, with all that momentum. But look at the picture to the left. You still had odds favorable momentum. And the smalls broke through and the large did not, and that area didn't break. So I want you to embrace the idea that for your first couple weeks, guys, let it be broken or not broken and keep it simple. And then you're going to start looking for when these have the potential to break. And you'll understand the best of the best idea when it's okay to look for that trend trade on areas that are likely to break. So D-Rock, absolutely. 50-50 means 50% are through and 50% are not. And it is not a clear path. All right, so smalls get through support, right? Not with odds favorable momentum. This is a little bit of overrun, guys. So it's not a termination condition because my triggers get to the other side, but it is one of those pivots with a loss of momentum. This is not a termination condition. This is just a pivot with a loss of momentum. I want you to look right. When price reaches that divergence low and all of the trigger lines remain above, now I have a termination condition. Now I have an area that's likely to stop the market. If this termination creates a full reversal, we're going to call it a strong bottom. I will, Chris. It's going to be for you and D-Rock when I talk about when the mid-band acts as a termination condition. Let's get through some basic concepts first, and then we'll walk into that one. Termination that creates a full reversal is a strong bottom from a low. Termination that creates a full reversal from a top is a strong top. Guys, your strong tops and your strong bottoms are the precursor for the highest probability trend trade that you can take. They are not a requirement for entering the market when the rules are met. They just add fuel to the fire. Here's another one of those pivot highs. There's that pivot stop out. When it happens at fibs, it becomes more powerful. But the recipe never changes. Price reaches resistance, no triggers through, no trade. Price pulls all the way back to support. So Chris and D-Rock, here's your first introduction to when a mid-band behaves as a termination condition. I'm going to use the stop stamp. Price reaches resistance, no triggers through. Everybody, we're good with that, right? That's basic concept. Price pulls all the way back to support in the mid-band. The triggers remain above, no short trades. 90% of what you guys do during the day is waiting for advantages. Is everybody okay with this so far? We're sitting on our hands. We're waiting for momentum. We're waiting for a clear path, and we just don't seem to have it, right? So Chris L, D-Rock, everybody, when price accelerates away from those large triggers fast and far and it smacks into an area, whether it's a mid-band, whether it's Fibonacci support, whether it's yellow one-to-ones, if I have room for an entire bar to form, an entire reversal bar to form before I get to those large triggers, this is when your mid-band counts as a termination condition. This is what we call the gap theory. And your gap theory simply says that if price accelerates away from those large triggers fast and far, smacks into an area, whether it's a mid-band, a fib, one-to-ones, it's likely to spring back and close that gap. It's like a slingshot. So not only is the termination condition in full effect here because all the triggers are above, but now the gap theory is in effect as well, and price is likely to close the gap to the large triggers. What it means for you guys is that any trade taken between the bottom of price and that snapback tends to get run over like there's a vacuum there. It's a patience piece. It's saying, hey, you know what? Hold on just a minute. This is a pattern that repeats itself over and over, and it may run me over if I try to go short somewhere down here. Does that help a little bit? And we'll find pictures throughout the day to show it, guys. And then it comes in, D-Rock, you can do whatever you want. Are you willing to fight the trend? Are you willing to fight the triggers against you? Are you willing to fight that termination condition? If you are, hell yeah, do it all day, right? But maybe not a great idea. But D-Rock, I'm gonna scroll back and I'm gonna show you an example of when that may become a long trade for you. But for now, price comes back up to all these areas. The triggers remain below. Guys, this is your strong top because it creates a full reversal. The smalls get below the large, and there's that tail, right? Looking for the highest probability opportunity. Keep it simple first. There's a million opportunities in the market every day. Price reaches one-to-ones, no triggers through. Guys, look at the indecision. That's that indecision we talked about that gets traders, that runs you over a little bit, right? There's a few bars up, a few bars down, a few bars up. Look at that. The mid band gets reached, and there's room for a full reversal bar to the large triggers. There's that gap theory again, snapping right back to it. But eventually, guys, this termination reverses everything. Small and large get above resistance. It behaves as support. The smalls are outside of the large. And there's your best of the best entry. There's your highest probability trade. There is that tail letting me know that there was a potential pullback on a smaller, faster chart. So guys, those are termination conditions using areas. It's a simple process. Price reaches, where are my triggers? Is everybody good with that? Because I'm going to open up a large chart real quick. Maybe not the NASDAQ. We'll just look at the S&P real quick. Price reaches support. The triggers don't really break through, and look how it pushes all the way back down to support and ultimately goes up. There's one of those tails. There's another one of those tails. From resistance right down to the mid-band, snaps back to the large triggers. Straight off of resistance, over and over. There's one of those pivot stop outs right at resistance. And then D-Rock, Chris L. Termination conditions say no short here, right? Look how the large triggers were a full bar away. Price accelerates and snaps right back to them. There's no reason to get caught. Price snaps all the way back to resistance. Large triggers don't follow. It finishes the move down to the area. D-Rock, you will probably get to a point in your trading that when this isn't a termination condition, when all the triggers break support and it gives you this look, you may find a conservative entry to continue with the trade. Here it is again, from a termination, breaks through to support, closes the gap to the large triggers. Guys, termination conditions happen all day. We're going to look for our opportunities in between them. And I'm going to pull up and I'm going to show my next termination picture before we go into a small chart term. Here's a termination condition on crude oil yesterday. Look at the indecision on the smaller, faster chart. That's that fight at key areas. Nexgen users don't have to be caught in that fight. How many times can you go long and short with this look when this chart just says wait? And that's kind of what we're looking at, right? Support reverses the market. The buyers take over. There's one of those tails in momentum. The key area is reached. Look at the indecision that ensues for almost an hour, caught in between areas. Ultimately, the buyers take over. There's your odds favorable. There's your entry. And there's your point where the market is likely to go. Next gen users, you can capitalize in between these areas where the fights happen. You don't have to get caught in the fight. And I think that's what I'm really trying to express right now is you don't have to be the first person in. You don't even have to be the last person out, guys. All you have to do is wait for the advantage of momentum and a clear path, and life gets pretty easy as a day trader. I'm going to give you one more termination, guys, and this is using a smaller, faster chart. This is using your entry chart. Sometimes that big, broad stroke of a brush is going to turn, not from areas. The path is clear. The path is clear. The momentum is strong, but the market came down, right? The market went up. We're going to use this final termination condition. You guys notice that I spend the most time on termination conditions? There's a reason. This final small chart termination condition, guys, you're going to see it on the entry chart, on that smaller, faster chart. It's three divergences in the same price range. If you see this happen on a small chart, it may push the market the other direction. If you see three divergences from a high, it may push that market down. It may not kill the trend completely, but it typically gives a big enough push to ruin your day. Three divergences just means that the market's lost momentum three times. It may terminate a trend. When your small triggers go from odds favorable to anything can happen, it adds a little power to it. And if that third pivot from a low is higher, it adds even more power to it. Or from a low it's lower, it adds even more power to it. So three divergences on its own can reverse the market. Three divergences with weak triggers makes it more powerful. It's a completely separate and more powerful look. And then when that pivot's higher or lower, it's even more powerful. So guys, this is a look that you're going to see on your smaller, faster chart. Let me put this picture in the room for you. When maybe your large chart is about to take a 180 for what seems to be no reason at all. This is going to help you not only avoid that last short or that last long that's unlikely to work, but it's going to become an awesome management tool for you because if you're in a trade and even with the advantage of momentum, even with the advantage of a clear path, if your small chart gives you three divergences up here, you're going to be able to cut ties with that trade. You're going to be able to preserve some equity, right? And wait for the advantages to come back. So that's the only small chart one that I'm looking for, guys. Three divergences. I'm always, 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 and I hope you will too, let the large chart define direction. Let the large chart define momentum. Let the large chart define areas. Guys, do you see it? This most current bar gives me an uptrend. It gives me odds favorable momentum, and it gives me a clear path. And once these are in, I'm going to refine it, guys. I'm going to take it down to an area inside of favorable large triggers on my smaller, faster chart, and I'm going to look for that entry where the market is most likely to continue. And D-Rock, for it to be a termination, absolutely. So check this out. Bum, bum, bum. John thinks there's too much information on this one, but I'm going to share it with you anyway because I love this picture. So here's termination conditions at a high. Here's one of those pivots with a loss of momentum. Guys, this isn't a termination condition because price did not reach an area. Price created an area. When price reaches that area and the trigger lines remain below, now it's a termination. See how the recipe is written for a high. Price reaches resistance, triggers remain below, textbook termination condition. Price reaches resistance in one-to-ones, triggers remain below, textbook termination conditions. And guys, from a high, it's going to look like this no matter what the line is. That's your recipe for a termination. And then from a low, you know it's going to be the same, right? Price reaches one-to-ones, all the trigger lines remain above. Don't go short. There's decisions being made. And look at this one. It smacks here, and then it hustles and bustles. And then that termination creates the full reversal and gives me odds favorable. And there's those tails, guys, taking me to my paycheck. Price reaches support. All the triggers remain above. No more short trades, no matter how strong the momentum is. Price creates a pivot, low, divergence, but when it reaches it and the triggers remain above, now it's a termination. So guys, this is your recipe and it stays consistent. Price reaches an area, if the triggers don't break, just sit on your hands, do nothing, please. And then when is the mid-band a termination condition? When price reaches the mid-band and the large triggers are a full bar away, there's your mid-band termination condition, and it's consistent. D-Rock, everybody is different. I want at least $200 worth of profit for me to take a trade. I want at least $200 profit for me to take a trade. That's me. That's my personal. And if you're using the super simple plan, that'll probably be your approach in the very beginning. But I'm going to tell you right now, great entries create manageable trades. And the better your entry, the more room you're going to have to your target. And I'm going to show you how to catch that great entry. When everything says up on your large chart, when the momentum is there, when the path is clear, right? Everything is screaming up. This is the look on your small chart, guys. You should have odds favorable momentum. Why not? Trade with momentum. It creates a huge advantage. And you're going to turn your attention, because you know it's time to look for a trade, at two things. The first thing that you're going to look at is whether or not you have favorable large triggers, guys. And favorable large triggers mean on your small chart that your large triggers, the smooth large triggers, and the synthetic triggers on your small chart, these stepped large triggers, are overlapping one on top of the other, like two snakes riding piggyback, like you set one hand on your desk and put the other on top of it. Because when these two work together harmoniously, it's going to create your smallest window of opportunity. It's going to give you the least amount of risk on a trade. So for brand new users, my hope for you is that you always manage your risk first, that you always have the best of the best. And these favorable large triggers create an opportunity for you to minimize risk dramatically. It doesn't mean that this is the end all be all, that this is the only look that you can have, but as a new user, this is your highest chance of success, favorable large triggers. And then rule number 3 says that we're going to use a limit order to buy or sell a pullback, just that tiny little fight against the ultimate trend. And it's going to happen at an area inside of favorable large triggers. And your areas can be fibs, mid-bands, and yellow one-to-ones. But the idea is that we want them enveloped, like a giant whale came and swallowed them. The giant whale is favorable large triggers. These areas are going to be in the belly of the whale. Would I ever use market when it touches the area? D-Rock, I'm waiting with a limit order. I don't have to. Because the second a reversal bar prints on my smaller, faster chart, I'm defining where I want to enter the market. I'm defining my window of opportunity. And for a long trade, it extends from the highest point of support to the lowest point of support inside of favorable large triggers. Does that make sense, everybody? From the highest point of support, this mid-band, the closest point to price, to the lowest point of support, the furthest away. This is your window of opportunity. This is where the market is likely to continue. And D-Rock, you can identify this, and I'm going to be honest with you, man, you're going to have it identified somewhere over here. But we wait for the reversal bar. We're going to use a drawing tool, and we're just going to draw it from the highest point to the lowest point. And guys, your limit order goes at the top of that window, at the highest point. You will literally wait for the market to come back to you. And if it does, you're in a long trade, right? This is where I take a picture of my picture, because I want to talk about everything that we just did. The market set up. Everything set up. The momentum was the strongest, right? There was nothing in the way. And you guys wait for the reversal bar. This lets me know that there's probably a small retracement coming. At the time of the reversal bar, I look from the top of my large triggers and synthetic triggers to the bottom of my large and synthetic triggers. And the tighter they are one on top of the other, the smaller my window is going to be. My window extends from the highest point of support to the lowest point of support for a long trade. Or if the rules were met for a short over here, from my lowest point of resistance to my highest point of resistance inside of favorable large triggers. This is the area where the market is most likely to bounce. This is the area where it's most likely to continue. This is where my advantage comes from, guys. This is my entry. Because of the momentum on my higher time frame, because there's absolutely nothing in the way to create a bounce, D-Rock, you're going to right click on your chart and you're going to have a limit order waiting right at the top of this window. You're going to have that limit order in place before that third bar happens typically, and you're just going to wait. And if that price pushes down and reaches your limit order, you're in a long trade. You're in a long trade at 79.21, right from the highest point of support inside of favorable large triggers. But the best part about that, let me clear some of my pictures. The best part about your entry is it has the advantage of momentum, it has the advantage of a clear path, and it has an advantage of you having entered the market at the point where it's most likely to continue. Guys, this is your recipe for a high probability trend trade. This is a trade that typically wins 70 to 80% of the time. This is your foundation trade that teaches you to recognize advantages. This is your foundation trade that teaches you to become a chart reader. This is your first 20 days with Nexgen, is being able to identify that window and have the courage to enter as the market's coming down to you or as it's coming up to you. We're developing trust in the first 20 days. We're also learning to manage our risk because we know exactly where the market is likely to continue. I'm going to put a protective stop beyond that window of opportunity, which means I'm in a trade when the market hits the top of the window. I stay in that trade, even if it goes to the bottom of the window because the advantages are still present. But if it goes beyond the window, guys, I'm sitting there with a catcher's mitt that is my protective stop that says I no longer want to be in this trade because I just lost the advantage. And this is where I remind everybody in this room that anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. And this is a cost of doing business. The market is wrong. That was rent, right? Whatever you want to call it, but guys, it's normal. Small losses are a normal part of a positive equity curve. I can't tell you the last day I had 100% winners. This is normal, but we manage our risk with the stop. Is everybody okay with that? You will watch the P&L go against you while it's in the window. But if it goes beyond the window, cut ties, guys. We don't trade hope. But I won't miss this trade if it sets up. I'll take this trade 1,000 out of 1,000 times because 70 to 80% of the time, this is my result. It gives me a statistical advantage each and every time I take a trade, guys. It gives me the absolute best of the best, and that confidence comes from success. Once this begins to move in the direction of the trade, I'm going to put my stop below. Because we're human, D-Rock. And I don't have a good answer for that. Um, but everybody sees things different, right? That lady behind you in your avatar picture, that's the one that stopped your heart. That's the one that gave you butterflies. That's the one that made you go, "Oh my gosh, I want to take a picture with her," right? That's your trade. So for some people, the high probability trend trade is all they ever take. But some people are attracted to something else, right? Safia is posting momentum trades in the room. They're not wrong, they're just different, but that's where her brain clicks, right? Some people like brunettes, and some people like redheads, and some people like a blonde, and that's cool because that's what you're into, and that's okay. But when you learn to read your charts, when you understand those simple advantages, D-Rock, something's going to speak to you. Something is going to say, this is so easy to see, I'm never going to lose it. I'm never going to miss it, right? Um, and it may be the high probability trend trade. It may be the medium probability trade. It may be the momentum trade. It may be the HVA trade, guys. That's not my decision to make. That's going to be up to you. But check this out. Once this goes in the direction of the trade and I get a reversal bar, I have even less risk on this trade. I'm managing my risk before I ever manage profits. And we knew that this red fib was off in the distance before we ever took the trade. So I had a profit target right at where the market's likely to go. And it's just incorporating these simple things so that you can create a plan that works for you. And guys, one of the easiest ways to get good at this trade is to begin to study it. When you have odds favorable momentum, even on these 50-50 looks, let's circle a couple tails, right? And look how often it's happening today. Let's see what the tails look like. They may or may not be good entries. Here's resistance inside of favorable large triggers. There's the highest point of resistance. This one came to the window. That split makes for a bigger window, but it goes down, and then three divergences creates indecision, guys. And this is a good one. I want to share this one. Remember when I said that decisions happen at fibs? Look at what's happening at these areas where the market has the potential to break. Look how your small chart shows that indecision. Look how that small chart says, just be patient, right? We're trying to figure things out. But you can go back on your large chart and you can circle these tails over and over. Not at all, D-Rock, because those large triggers are not a full bar away. This isn't gap theory at all. This is just an area with the potential to break, but your entry chart is absolute garbage. So you probably aren't going to take this trade. And I'll talk about perfect entries. Look at this one. Isn't this so much easier? Let's do an entry together, guys. What do you say? Guys, want to go through the full process bar by bar? Let me take all the fibs off. I want to focus on the easy, guys. Da, 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 da. All right. What's my trend? Ladies and gentlemen, which direction is this market going? Remember, most current bar is going to define direction, momentum, and entry. We're going up, so I'm only looking for rules to be met for high probability trend trades. So let's walk through the process. How should my brain be thinking as I'm going through this trade, guys? Remember that we learned everything sequentially. I want you to look for it sequentially. Chris, I took everything off because I only want you focusing on the entry for this one. First, we identify the trend. The trend is up. Then we look for momentum. Does everybody see how the smalls are above the large are wide, they're angled in the direction of the trend? Guys, I have odds favorable momentum. This is a market that's likely to continue in the direction of the trend. And then I have to ask myself, is a termination condition reached? Guys, is this bar hitting a fib? Is it hitting one-to-ones? Is it hitting any? No, it's not. My path is clear. So since I have an uptrend with odds favorable momentum and I have a clear path, I'm going to look at my smaller, faster chart. And guys, this is exactly what it's going to look like. So here's some of the questions that I'm asking myself. Are my smalls above the large? Do I have momentum here as well? I think I do. I love it. Are my trigger lines up and one on top of the other? Absolutely they are. Makes me feel good. And I'm just looking, what are my areas? I see a mid band right here. I see Fibonacci support, and I see yellow one-to-ones. But we're waiting for something to happen, right? The rules say we're going to buy a pullback, a small retracement in price counter to the underlying trend, which means that on my smaller, faster chart, when everything's going up and I'm scared to death that it's going to go away, I'm waiting for a reversal bar. And this is how it's going to happen live. So at the time of the reversal bar, I'm going to look from my highest point of the triggers to my lowest point of the triggers. This is where I'm looking for areas. Guys, give me a Y if you're good with that. I'm not trading the trigger lines. I'm looking for the area inside of the trigger lines. And I only have one, which means that my window of opportunity is from the highest point of support inside of favorable large triggers to the lowest point of support inside of favorable large triggers. Guys, this is where the market is most likely to bounce. And I'm going to activate a limit order a tick or two above that mid band. This is how soon I know where I want to enter the market. And then the market starts coming down, and it starts coming down, and it's coming down. And notice how my mid band is coming up. It's okay to move that limit order a tick or two above it. And it's coming down, and it's coming down. Oh my gosh, it didn't hit my order. I'm not in this trade, guys. And this is where a lot of you are going to jump in right there at 39.50. Who wants to jump in? Should we do it? So there is the fear of missing out entry, which means, oh, your stop is all the way down here. You have almost 6 points of risk on this trade. Let's see what happens. Does it pay off? Uh-oh. Check it out. There's my entry at an area inside of favorable large triggers. Do you guys see how that happened? A little bit of patience. It came back for me. You're now in a trade at 45.36.98. Or you're in a trade at 45.39.45. But now I have a reversal bar from the area inside of favorable large triggers. Guys, you have 3 ticks of risk on this high probability trend trade at this point. And off to the races. Straight to Fibonacci resistance. Guys, this happened at 8:52 a.m. this morning. This was a trade that fit your rules at 8:52 a.m. this morning. Do you notice how only 2 divergences printed? Which means that I don't have a termination condition. It can pivot off the large, Dwight, and you see that. Sometimes it will. But these areas give you a bounce point. These areas give you a point for that market to ricochet. It's like a brick wall throwing a tennis ball at it. So guys, your job as a brand new user is simply to go back and study these a little bit, to practice them when you see them, because they happen all day long. Let's see what this one looks like. I'm scrolling back. It's 6:21 in the morning. Let's see what that circle looks like. Dag nabbit. It was a mid-band inside of favorable large triggers. And guys, here it is again. All I'm doing is studying. Odds favorable, clear path, reversal bar, pullback. There's only one line where it's likely to continue. And that's exactly where the market bounced. So guys, this is how you develop trust. Scroll back on your chart. It's not so hard, right? There's that next circle. What's it look like? This one didn't hit areas inside of favorable large triggers. Guys, guess what? That's not your trade. It doesn't fit the rules. It's not your trade. Learn to accept that. Here's middle of the night. Do these patterns repeat themselves in the middle of the night? Yes, these patterns repeat themselves every day, every market. Your job is to get so trusting in this methodology, believing in it so wholeheartedly that you never miss this entry. And if you give yourself 2 options, rules met and rules not met, I don't know if there's a termination condition there or not, but even if there were, it still pulls right back, doesn't it? So guys, you're going to see this all the time. I just want you to study it. I want you to take pictures, and I want you to post your pictures in the room. That's one of those 50-50 trades. The small triggers broke through, but the large didn't. It still pulls right back to resistance inside of favorable large triggers. This would be a medium probability scenario because the path isn't clear. So guys, this is what I want you to do. I want you to take this and I want you to print it out and I want you to put it on your desktop, and divergence is. So Snorri's saying, Mark, if I don't have a clear path, do I want to give up momentum too? Very astute. And as the brand new user, the trading plan I'm about to give you says that if this divergence prints, there's no trade for you. And how many areas aren't broken? Not only is 3350 not broken, but 31's not broken either. You have two areas that aren't broken, and you have a loss of momentum. Good eyes, Snorri. But initially, what I want you guys to do is I want you to commit to your entries. I want you to commit to learning to get in at the right spot because great entries create manageable trades, guys. This is your trend trade checklist, and I've never had anybody follow this checklist and do worse than 70%, but I've also never had anybody follow this checklist exclusively because the average human gets bored only taking 2 or 3 trades, even if you can make $1 million a year with it. The average human brain has to be busy. But guys, this sets you up for success in the beginning. That's your high probability trend trade checklist. Here's the exact same checklist for you to study each morning for your first 30 days, describing what is a good top or bottom. Here's a picture, termination that creates a full reversal. And note that you can take a trade without a good top or a good bottom, but it may need to be managed. It's not the highest of the high probability. Still can be a great trade. Here's your odds favorable momentum. Here's your termination conditions, not broken. Whoops, I just lost my connection for a second. Can everybody still hear me? All right, it's come back now. It should be good again. Let me make sure that my headphones are still connected so you don't get that echoey. Yep, okay, we're good. Cool. So here is the easiest way to do it. Every one of you called the trend in the first 3 seconds, right? Within 3 seconds, you are capable and confident to understand which direction the market was moving, guys. So congratulations, there's your first victory. Once you establish the trend, you have to establish strong triggers, that separation between the two. And when you have that, then you'll look for the clear path. And guys, 1 and 2 happen on the first day. It's pretty simple. You get good at it. But then it's going to take a little bit of study to begin to recognize these termination conditions. And not only to recognize them, but to trust them and believe that they may kill your forward progress. Um, and then once you understand termination conditions, you're identifying your entry, your best of the best area. And guys, let it be sequential, right? Let it be foundational and build from that great foundation. And this is the first bite of the elephant that you're eating, guys. This is the first piece of the puzzle, is getting in at the correct spot. And then, Snorri, you asked if you do not have a strong top or bottom, but you have divergence with you, will it make the top or bottom stronger than not having divergence? Not necessarily. Um, and Snorri, I want to go back to this picture to why I say that. Because a loss of momentum is just that. It's a loss of momentum. But these institutions, guys, these huge traders, they're reacting to the area. They're reacting to these Fibonacci areas. They're reacting to these yellow one-to-ones, right? They're making a reaction at these divergence highs. So a loss of momentum lets you know that things may be changing, but when it's a solid termination condition, then that means that they've actually reacted to the area, right? And if it comes from down here, even with divergence, it may only push them back to the reaction point. It's a great question. But I think that what you're going to find is that this not a great termination condition with divergence was just enough to push it back to a continuation point to try and make it to those next key areas. And then once they got the key areas, that little overrun with divergence says, "Oh, let's see what happens." And then when they pull back and give you that second tap on it and the triggers don't change and the gap theory is in effect, this is like, all right, let's confirm that this is overrun. This lower divergence from resistance suggests that this was just overrun, and the market starts to get likely to continue in the direction of the trade. So I prefer fibs. If it comes from a fib as well, that makes me feel good, right? But there's that loss of momentum, just enough to get it back down to support where it finishes the move to the key area. Does that make sense, Snorri? Did that answer the question? Sometimes I say too much. If I ever do, just let me know. Awesome. Great questions, guys. Keep them coming. And then Snorri, that great top, right? That strong termination condition into the 50-50 makes this trade more likely to work. And when you guys go and begin to recognize patterns, you're going to see that more and more, and you're going to know when to adjust your rules based on your chart reading. And that's what the disclaimer is on this simple plan that I'm giving you guys. So if you're brand new, if you just bought software, if you just started a demo, if you're leasing for the first, I'm only leasing for a month to see how I do. This is your plan for consistency, guys. This is your plan to give yourself the highest probability. And this is only a stepping stone. Guys, this is your foundation. This is not designed to be the end of your trading plan. It can be. My trading plan is really freaking close to this. But this is a stepping stone in your learning journey. It's designed to optimize your chances of success with that high probability trend trade and with that 50-50 trade. But it's going to be your simulation, your study, your class feedback, and your continuous practice. You will craft a plan tailored to your personal goals, guys, and it's going to be based on your experience reading the indicators. I really think that once I put this disclaimer in the classroom, it changed the entire dynamic of the class. Everybody sees things differently. There are no wrong trades. If the trade is right for you, then it's the right trade. This encourages you to stick with statistical advantages. This encourages you to have the best chance of success as a new user because confidence comes through the memory of success. And that simple plan for consistency starts with never fight direction or triggers. Never fight the immediate momentum. Like if it's an uptrend, go up. If the momentum is up, don't go down because you see a red line, right? Oh, D-Rock, I love it. And we're just going to define the entry. Just going to define the entry. That's it. We're just going to get into the market at the best spot because it creates a manageable trade. So guys, your first 20 days with Nexgen. Remember, you're going to do this for the rest of your life. This is your new chosen career. When you started college to be an engineer, you weren't building bridges in the first semester, right? You were learning equations. You were building a foundation so that you could be the best damn engineer you could be. Get the great entries because great entries create manageable trades. In the same way your entry is mechanical, the same way your entry is pragmatic, the same way your entry is designed to alleviate hopes and fears and anxieties and opinions, your initial management plan can do the exact same thing. And we find that if you keep it very simple and pragmatic in the beginning, guys, it's going to help you learn to read your charts and learn how to manage more aggressively. And your management plan will change dramatically when you're a chart reader. So everything begins with the great entry. Everything begins with the entry inside of favorable large triggers at an area. And from this entry, your initial stop goes outside of the window of opportunity where the market shouldn't go. Typically, it's going to be 12 to 14 ticks in the futures trade. You're going to be risking 120, $140 on the trade, but that's okay because you're entering with the advantage of momentum, the advantage of a clear path, and the advantage of an area where the market's likely to bounce. At this point, guys, there's nothing to do. Either your stop gets hit, right? Acceptable losses. 20 to 30%, paying rent, cost of doing business, whatever you want to call it, or the market gives you a reversal bar in the direction of your trade. And if it does, you're going to reduce your risk 2 ticks above that reversal bar. If I get a reversal bar, then I move my stop. That's your only if then, guys. There's no opinions, there's no emotion, there's no hope. That's it. And now you're either going to get stopped out for a small loss, which is totally cool. It's an even smaller loss than outside the window, or it's going to go to your first target. And this first target kills you guys that want home runs. $100 first target, guys. $100. If you have momentum and a clear path, this is a pretty easy target to hit. $100 target is almost inevitable with that much momentum. And it's not designed to make you rich. What it is designed to do is activate your serotonin, right? It's going to activate that dopamine. It's going to activate that feeling of confidence coming through that instant success from hearing Ninja Trader tell you, target reached. And this $100, well, yeah, they can't take it. That's your money. And you're going to move your stop to break even. And now you have money in your pocket and you have absolutely no risk, guys. Absolutely no risk. You have nothing to lose. And I'm going to tell you right now, that break even stop is going to get hit a lot. You're going to have a lot of $100 trades with break even on the second, and then that market's going to do exactly what you thought it was going to do. But remember, in the beginning, all we're doing is building confidence. So there's 100 in your pocket. There's absolutely, Snorri. There's no risk on the trade. You have nothing to lose. And the idea behind this, guys, the reason I put it in place like this is because now it gives you the freedom, the mental freedom to let that market do what the large chart said it was going to do. To let that chart either run to the second target or hit that stop break even. And even if it goes break even, you still have $100 in your pocket. But if it hits that super conservative $200, guys, that's a $300 trade. And I type this in the room every day. That $300 is a $1,500 week, guys. It's a $6,000 month, and it's a $72,000 year. From only $300 a day. And what if you double that, right? Suddenly you're at $144,000 a year. And what if it's a 10 lot? And what if it's a 20 lot? And what if it's a 30 lot? So the idea isn't that you take every trade, take the best trades, have an advantage, and understand that every trade doesn't have to be a home run. So this initial plan is designed to give you confidence. It's designed to make you a chart reader. It's designed to give you the ability to craft a plan that's tailored to your needs. Embrace it. Embrace simplicity. Don't give yourself the burden of thinking too much. And then it talks about the 50-50 trade, that area potential to break. And guys, when we talk about a 50-50 trade, I use the phrase, my money is worth the perfect entry on the small chart if it's not perfect on the large chart. It's the trickle down. If it's not perfect here, meaning that I don't have a clear path, then I'm going to insist on odds favorable momentum on my small chart. I'm going to demand no divergence on my small chart. And I'm going to 100% say I'm not risking $300 on a maybe trade. I want my window of opportunity to be small and concise. This simple plan for consistency, guys, revolves around those ideas. 50-50s, demanding on momentum, demanding on momentum on both charts. And notice that it says no divergence on the 5-1, and that's exactly what Snorri said. Snorri said, but Mart, divergence prints, it doesn't fit my rules. Then that's not your trade, right? If it doesn't fit your rules, it's not your trade, and that's okay. But you're gaining experience. And eventually it may be. From a good top or bottom, did that termination condition create the full reversal? Guys, this is so powerful. Those termination conditions creating a full reversal, it's so powerful, but because it means that the buyers got to the area that they were trying to get to. It means that the sellers got to the point where they wanted to be, that the buyers retaliated and went right to a key area. And what it does is it means that the market's done what the market wanted to do in that moment. And the momentum couldn't follow it, couldn't push them through the area. So strong tops and bottoms create an awesome opportunity for success. And then you're just going to enter at the area. Notice that I say again, divergence, no trade, not giving up that momentum. What you're going to find in Snorri, Drock, I'm going to tell you right now that if it's coming from a good top or bottom, your plan may change that one divergence is okay. Mine did. But I have to have the strong top or bottom in place. You're going to adjust your plan based on it. You're still going to use windows of opportunity. You're still going to use the reversal bar. But if divergence prints, your management changes a little bit. It's going to be to exit the trade, right? To get the hell out of there because you've lost momentum. And guys, this is your simple plan for consistency in the beginning. This is your simple plan to make you a chart reader, to get you where you need to be, to keep you busy with the highest chance of success until you get to the point to where you can create your own plan. And you're going to use the exact same template, whether you're a momentum trader, an HVA trader, or a gap theory trader, whatever. You're going to define your entry, take pictures of it, and make sure that it wins more than it loses. And then you're just going to repeat every day. And then, Chris L., I haven't forgotten about you. Termination conditions on the large chart, guys. Price reaches the area where the trigger lines. You're going to have a bunch of lines on your large chart. You're going to have lines that extend all the way out. These are native to the 13.2. These are the ones that come from the pivots that are created on that chart. You're also going to have fat ones, which come from the 21.3. Guys, these are synthetically placed on side over here. And then you're going to have skinny ones that are from the 5.1. Notice that they don't extend all the way to the right. I'm going to tell you right now, I don't want you to weigh these out, give them precedence one over the other. If price reaches an area and the trigger lines remain below resistance or above support, it's a termination condition. I don't care if it's the 21 fib. I don't care if it's the 13.2 fib. It doesn't even matter if it's the 5.1 fib. The recipe for termination conditions is true. So those are what your fibs are, but guys, you don't even need to know that. It's too much information. If price reaches one and the trigger lines don't go through, it's a termination condition. Stop rushing me, Dwight. No, I'm just kidding. And thank you, guys. Always do that. If you're afraid that I missed your picture, always let me know. But Dwight, remember, if I haven't started clicking on them, there's no way I could have missed yours, right? I love that you remind me, though. Keep me accountable. If I do miss a question, if I do miss a picture, guys, don't let me get away with it. But I am going to take a break real quick. And check it out. Snorri, I want you guys to see this. The first 50-50 trade, well, that wasn't a 50-50 yet. The first 50-50 trade had one divergence from a good top, and it worked right down to the second divergence. And that's when it killed it. So that's when the change happens, right? The area had the potential to break, but it didn't. Your rules are designed to keep you safe. I can't stress that enough. Your rules are designed to keep you out of trouble. And it means that sometimes you would have entered after the first divergence, unless you were following the simple plan, and then you just said, that's not my trade. And guys, let me show you a picture that I took this morning. I was watching the market this morning. There's one of those 50-50s with one divergence, but it's not from a good top. If you took it, that's cool. Two divergences, absolutely smoked it, right? Not from a good top, two divergences. These have to be managed. And I took a picture reminding myself, guys, I take pictures when my rules aren't met. That with these two divergences, it's just not my trade. And then I take a picture after that validates the idea that my rules create a statistical advantage, that my rules, every time I get into the market, I want the opportunity to win more than I lose. I want the opportunity to have something that's been proven to win more than it loses. And look at this, three divergences in the same price range, 50-50 on one-to-ones. A lot of you are going to take this trade and you're going to get run over and you're going to be mad because you're going to say, but it was with the trend and I had a good top and I had odds favorable momentum, but you would have broken that rule that was laid out for you, guys. The rules are designed to keep you safe. Your rules should give you a statistical advantage every time you enter the market. All right, I'm going to leave you with the S&P, guys. I'm going to take 5 minutes. Go stretch your legs for a second. When I come back, we're going to start posting or start clicking on all the pictures you guys have posted. And I'm going to remind you right now that when I look at your pictures, ladies and gentlemen, I don't care what kind of trades you took, because this is a teaching room. I'm going to refer back to these three advantages every time, and I'm never going to tell you whether your trade was right or wrong. I'm never going to tell you when to get into the market. I'm going to talk about advantages. I'm going to talk about what I see that you did amazing, and I'm going to talk about things that may be a little bit of a hindrance as you look for success. Cool? And if Jose takes a trade that doesn't jive with your plan, don't worry about it. It's Jose's trade. And if Safia takes a trade that doesn't make sense to you, don't worry about it. It's Safia's trade. But I do want you to feel free to ask questions. And sometimes the answer may be not yet. Learn how to read your charts first, and that's okay. So, guys, I'll be back in 5, and then we're going to get to that second half of class. Of your job, but you don't want the breaks to be too terribly long. Bingo. Safia keeps putting bingo in the room. What the heck does that mean? Hey, PFI, have a great one, man. Bingo! You will hear this term many times when a profit target has been reached and filled on a winning trade. Bingo! I love that, guys. When you win trades, put bingo in the room. It's exciting for everybody. She's killing it. You guys want to know her secret? Can I tell you her secret? Safia, can I let all your secrets out of the bag? And guys, let me tell you something. When you see people killing it, there's nothing they can tell you that I don't tell you. Let me stress that real quick. Everybody sees somebody else winning and they want to reach out. How do you do it? How do you do it? How do you do it? Right? Let me tell you exactly how she did it. She learned how to read her charts and she formulated a plan that fit her needs and she committed to it. That's it. Guys, that's the recipe. There is no magic. It's the work being done that creates success, guys. That's all it is. So make the decision, commit to it. Say, I'm going to do the work. Your results will be a direct reflection of the work that you put in. Guys, I'm scrolling to the top. I want you to see it. I have to scroll to the top like this, and I'm going to grab hold of some pictures, and we're going to start talking. Um, and here's your reminder real quick, guys. When you annotate charts, this is what I need from you in order to be successful, in order to give you the absolute best feedback. I need you to write your rules on the chart. I need you to write arrows to your rules being met. And this isn't just for me. Guys, I can look at your chart and read them and know exactly what you're doing. I really can. And chances are I know exactly what you were thinking, to the point to where it's almost scary, like I was over your shoulder and was listening as you did it. I need you to do it so that every time you write a rule, it corresponds with the visual. And you're solidifying these rules that are bringing you success. So write the rule. This is odds favorable momentum. Here's my arrow. This is a clear path. Here's my arrow. This was a pullback to an area inside of favorable large triggers. Write it out. Here's my arrow. Show your timestamps. On the bottom, show your prices, because we're going to line up the bottom of this tail with your great entry to make sure that you followed rules so we can see where you got in. And guys, it's not just to see if you followed rules. What if there's a way that I can help you get a better entry? What if there's a way that I can help you manage the trade better? What if there's a way that I can help you be more successful 10 steps down the road? The more information you give me, the easier that is. Right click on your right chart, guys, if you've never done this. If you can't see where you entered, if you can't see where you exited, right click on your chart, go to data series, and make sure that plot executions gives you text and markers so that you can see exactly where you got in and you can see exactly where you got out. And that's going to let me give you the absolute best feedback. So I'm going to get us going here. Joel got us started last night. I don't want to miss his charts though, because Joel always gives me a checklist on his charts. Joel always talks about what he sees, what his rules are, why he did what he did. And Joel, how many trigger lines are through support? Yeah, and that's it. Safia, you posted over 350 images and you took feedback even when you didn't want it. That's what got you where you wanted to be, guys. It's nothing else. And can I say one more thing about these people that you see finding success, these people that are in front of you that you want to trade like? Guys, they're not chasing 50 different trades. They've got a couple looks that have been proven to win more than they lose, and they're taking every day to get better at that simple look. Joel, you had a termination. It created a full reversal. It gave you odds favorable momentum, but you absolutely broke the heck out of rule number 2. This is a termination condition on 2 different areas. And because it was, This entry is a rules breaking entry for sure. You got lucky. This one won. But rule number 2 wasn't even close to being met on that one. And guys, you will get lucky every now and then. That's the market training you to break your rules. That's the market saying, hey, you know what? Let's give Dwight this one and make him think that he can put his money in the market into a termination condition, and then let's stomp him on the next 20, and he'll think that he's still killing it. All right, so Sydney, I need both charts, right? I need that big chart and that little chart so that I can tell you what's going on. Ooh, that doesn't look good. So here's your large chart. I need to see those entries. Oh, I need to see those entries. I'm assuming this is the small chart that goes with the large chart. Your entry, Sydney, would have been large triggers are wide, but your synthetics are flat. It breaks the area. Just not waiting for the pullback there. Um, and notice how, and this is just me, and I hope this is okay. Entry, large triggers wide, small triggers up, stop, right? Show me your entry. Because if you cleared the area and bought that little pullback with everything up, I love it. But if you entered below resistance where nothing agrees, I think it creates challenges. So by right-clicking on your chart and give me that information, or even just a circle where you did it, is going to help me give you better feedback. It really will. But it looks like you were going with trend. It looks like you were going with momentum. And it looks like you took a momentum style opportunity. And just a little extra on that chart would help me confirm that that is exactly what you were doing. And then guys, Jay Solar said he's not going to be in the room, but he posted this one. And this is his 50-50 trade over here. This is that smalls above the large are wide, they're angled in the direction of the trend. And this large chart looks great for a 50-50. Except, notice that there's two divergences. And it gets run over. If you take the first one with 1, it's got a pretty good shot to get managed out of. 2 divergences kills the party. And then this is an example about too much information, guys. If you're gonna use another chart, and in this case he uses the 21 chart, and we talked about this already. He's not in the room, but I think that this is a great example for you guys that think more is better. This is what happens so often, is people have the large chart. And even you new guys, does anything about the large chart say go long? What do you think? It's in a downtrend, the smalls are below the large, everything is weak. Does anything about this large chart say, hey, let's look for a long trade? No. And then you come to what most of you guys are using, the 13.2 chart, and it says that this area has the potential to break. And then your even smaller chart says, man, but you're losing momentum and it's kind of ugly, right? So trickle down, horrible, not perfect, not perfect. Guys, your money is worth taking great entries. Your money is worth having all those advantages. And this is just one of those ones. It was already pretty bad with just the 2, but that large one just confirmed it even more. Guys, I don't trade with the 21. I don't trade with a market flow. I'm a 2-chart trader. Same way I teach it in the room. Doesn't mean that's the right way. It's just the right way for me. You'll find what works for you. And then PFI left, I think, but let's talk about it. PFI putting an awful lot of faith in yellow 1-to-1s. Nope, not yet, cream, not yet. And guys, I'm gonna reiterate, you can do whatever you want to do. It's not my job to tell you what to do, right? But if I have odds favorable momentum, larger up, smaller up, everything says up, the trend is up, I have odds favorable momentum, smalls outside of the large, both triggers are up, everything is up, And if I'm putting all of my faith in this divergence, pushing the market down to here, how often do you suppose this one's going to win? Not very often, guys. And this is the market allowing you to be lucky, teaching you to break your rules, teaching you to take unnecessary chances because they need somebody to do that, to be on the other side of their winning trades. This is so low probability, but it's your trade. All right, Sean, termination creates a full reversal. These divergences really kind of confirm that top, don't they, Sean? So let's go through the basic chart reading. These three divergences kind of say, hey, Sean, you know what? We definitely, let's mess with this one. Let's look for it. And then everything says down, and you're asking, would this have been a good spot to sell? So Sean, and let me draw the picture here. You're asking, should I sell at Fibonacci support with all of my triggers above? What do you think? Should you sell directly into a termination condition? I know, and that's why I always go back to the advantages. And then Sean, let me show you something pretty cool. Is the market does continue down a little bit and it hits the mid band. And then there's your gap theory. And then Sean, after a market that has already put in a good top, hits the mid band creates a reaction and it comes all the way back to these trigger lines. This is going to be your higher probability spot. Does that make sense? So you get this awesome top. Great job, great recognition. And it screams down to the mid band, and that's awesome. That's what we would expect from a good top. But when it hits the mid band, the large triggers are a full bar away. Chris L, D-Rock, there's your gap theory, which means that this isn't very likely to win, right? And it pulls right back to it. And then we have to gauge at that moment. Is there going to be a trade to the short side? Is that market going to continue down? In the moment, I don't have a rules-based trade. So just a little bit of patience from the chart read, ultimately, Sean, is going to create advantages that may have you taking this 50-50 look from the absolute best spot. Does that help a little bit? This is a great picture, man. There's a lot of wonderful opportunities. And I'm going to do one more thing for you, Sean. Ready? Keys to the castle. If you have support right here, if you're going to take a shot at the short, at least get to the other side of trouble. Does that make sense? Like at least get to the other side of that line that may stop the market. And then maybe with all this momentum from a good top, if you get a little blip right here where it kind of breaks it and then comes back, that becomes a pretty good momentum look to look for that push down to the mid band. Does that make sense? Awesome. Great picture, dude. Thank you for sharing. Guys, everybody gets better when you post pictures. Everybody gets a lesson when you post pictures. So do it for the team, right? All right. And then Snorri took a great picture earlier, and I love how your pictures always show up right when the lesson is needed. So Snorri, there is that same idea, right? Oh, and I hope you're in here listening, guys. This is a great chart read. Which checklist? Oh, good Lord, I don't know. I'm not sure whose that is. I think you just found it, Gene. You may have to type it back out. What's it a checklist for? That's a lot. That's John's? All right. Good top or bottom, I like it. Odds favorable, I like it. Area for entry, I like it. Are you using a 13 range, Gene? Okay. I mean, you've got it right there. There's the momentum style trade. Just retype it. John may have a copy. If you go to the traders chat, ask him. He'll probably have it for you. Let me look real quick and see if I have it. I don't think I do, but if I do, I'm glad to share it with you. Let me double check real quick. Oh, hey, check it out. Gene, I do believe that's it, my friend. That's his revised version. So that one's even more updated than the video. There you go. You're so welcome. I don't look at it. My brain doesn't work like John Novak's. I get in trouble when I try to trade like John Novak. So Snorri, let's talk about what a great read this was, and guys. And this is really kind of expectations. Check it out. Termination creates the reversal, right? And it comes all the way down to the midband, and there's your gap theory. And this is what I was telling Sean, Snorri, if you're listening in. The gap theory says pump the brakes, right? Does everyone get that? The gap theory, having that full bar back, says pump the brakes. Hold off a second. Don't take that short trade. Not yet. Not yet. We don't have to guess. But when it pulls all the way back to those large triggers, that's your reaction off of the midband, off of that good top. This is where I start to look for my first short trade. This is where I start, personally, this is where I start to look. Because it's already done what the good top wants it to do, right? It's already reacted, and it came to resistance, and absolutely nothing blinked. This is a great opportunity for a short, and it's a great read, and that gap theory is what got you back up to that best of the best spot, guys. And I'm going to tell you right now, you're going to skip a trade because of the gap theory, and the gap theory isn't going to come true. It's not going to pull back to those large triggers, and you're going to be mad as hell, and then you're going to fight it the next time, and it's going to run you over. It happens more often than it doesn't. It really does. Gary, 50-50, one divergence, two divergence, and those small triggers are up strong. Great job doing nothing, Gary. And then PFI, three divergences. That's a great top. Odds favorable. And look at how far from the best area. This is an awesome trade. What the hell is a John Novak 2004 trade? That means nothing to me. I don't know what that is. So Sean, there's pre-market. The market is moving all the time. Nasdaq, I'm on Pacific time frame. At like 7 o'clock here, Pacific, sometimes I can find Nasdaq trades. It's pretty much 24/7. It takes a break in the afternoon. So in pre-market, the volume is a little bit lower, but it still moves and the patterns still happen. Remember that news happens before the open typically. So like yesterday, I had already exceeded my goal before I started teaching the class because there was so much motion in the morning. Some days it's there and some days it's not. Same thing with the S&P. Crude oil, the European markets start trading it at 2 a.m. So there's opportunities before the market opens, Sean. Absolutely. And there's opportunities in the evening. And if you're working all day long, and let's say you go to work at 6 a.m., there's traders that wake up at 2 or 3, trade for a couple hours, hit their goals, and then they go off to their real job until they get there. Guys, termination, full reversal, odds favorable. PFI is not in here, I don't think, but I would just say get in at the area inside of favorable large triggers, right? Instead of getting in right at the support that may potentially hold. It's a nice trade. Just late on the entry. Definitely late on the entry. And guys, if you're going to get in late, make sure that you have room to make money. And then Dwight, here we go. Let's see what you did. Dwight, 50-50 trade, one divergence. You have a huge window of opportunity, and it looks like you just split the difference. What got you out? What got you out of this trade? That would be my question. Why did you exit? You exited before the next bar even finished. So start asking yourself, what got me out? What changed in this trade? Did you still have odds favorable momentum? Yeah. Did you still have a 50-50? Yeah. Still had strong triggers. Smalls were still outside of the large. You didn't even give it a chance to define your risk. And this is okay. So Dwight, full confession right here. Guys, and I'm telling you, I teach this class based on the mistakes that I made. When I finally got graded entries, I would take about 25 trades a day. Just I was looking at a couple different markets, and typically between 20 25 trades a day is where I ended up on the average day. And in my first couple months of finally getting my poop in a group, at the end of those 25 trades, I'd be up about 25 ticks, Dwight. Because I would do the exact same thing. Then why did you enter? Ask yourself that. If both triggers didn't break support, why the hell did you get into the trade if it's going to scare you out? Does that make sense? You committed to the trade because of the momentum. You committed to the trade because of the strength. You committed to the trade because of the potential of this area to break. And you got in at a great spot. So the same commitment that got you to pull the trigger, man, guys, you gotta take an ass kicking every now and then. You have to be willing to. That's not managing closely, that's managing fearfully. Does that make sense? That's letting a fluctuation on a small chart scare the ever-loving crap out of you, and you completely forgot about this momentum, and you completely forgot about this direction, and you completely forgot about these strong triggers and the area inside. And that's totally normal, and that's what I'm trying to stress right now. Is congratulations, Dwight, you're human. Are you on simulator? Chris T, Control V. If this is the pop out, Control V. We'll post it. You're on simulator, right? Cool. So Dwight, if you have $1,000 of Monopoly money in your pocket, and a mugger comes up to you and says, "Give me $1,000 of Monopoly money, or I'm gonna shoot you in the face," what have you lost? Nothing. It's Monopoly money. It's not real. But if you are absolutely terrified of losing with fake money, what's going to happen when you go to real money, right? So start letting these work themselves out, Dwight. Let them work themselves out and start annotating your chart. Start telling me your rules. And as you work through this fear, start telling me what scared you out. And more importantly, why not, call me crazy, why not just keep it pragmatic in the beginning? Why not just let it be if then? Why not take your emotions out of it because you're on simulator? And that's what simulator is for, building great habits, not creating muscle memory for fear-based exits. Does that make sense? And I'm not beating you up, but your reading charts freaking amazing right now, and you did it again over here. Here's my entry. Stop being okay with a tick. It barely covers your commissions on that trade. There is no room for emotion in trading. It'll get you every time. All right, Chef. Is this symmetry a good time to sit on your hands, or should I treat this as a good pullback? Chef, can I answer your question? Did I? Can I use your picture as an example for the whole room? All right. The trend is down, yes. I love it. The momentum is down. I love it a second time. The path is not clear, right? The path is not clear. The smalls are through, but the large are not, which means that I'm looking for the perfect entry, right? And I've already had two divergences. My large triggers are down here. My synthetics are all the way up here. And I have a mid-band stuck in the middle. That's a great time to sit on your hands. And this goes back to the whole idea that decisions are made at fibs. Here's the fight between buyers and sellers. You did a great job of staying out of it. Remember that your entry should come from an area inside of favorable large triggers. It should come from where both your large and your synthetic are together and pushing. So when you write your rules on the chart, a lot of the times it's going to answer that question. And you did a great job by doing nothing because you didn't have a clear path and you certainly didn't have advantages on your small chart. So I think that was a great read, and I think that was awesome reaction to it. Doing nothing was the best reaction that you could have had. And then Dwight again. But guys, write your rules on your charts. It's going to answer a million questions. And then there's that multiple divergences on a 50-50, right? 50-50, 1, 2, 3, 4 divergences. There's that indecision. There's just nothing to do. Isn't it amazing when your rules say do nothing and it saves you? Keep taking these pictures, Dwight, because what they're doing is they're confirming that your rules are good. They're confirming that you're in a good spot with what you're looking at and the way you're reading it. And then Safia, everything says down. The momentum is strong. Everything is down. Your long didn't work. You took the last ditch effort at a long, and I don't disagree with it. It just didn't work out. And then you came back and you took the momentum and appropriate profits. You let it break. Sean, do you see how she takes her entries? Guys, these aren't high probability trend trades, but do you see how she lets the area break? She lets it get to the other side of it, and then she gets out on the way down. Safia, that is beautiful. Absolutely beautiful. It's so much easier when all the charts agree, isn't it? It's so much easier when everything says down. It's so much easier when you're not fighting anything, guys. It makes life wonderful. We don't have to fight. We're better than that. All right, Snorri. Not a strong top. It does have divergence, right? And the large are breaking down. I love this. Snorri, do you have a history in the market? Like, are you comfortable with watching it move right now? Then don't take them, Gary. Then don't take them. Guys, I suck at momentum trades. I don't mind telling you that. I don't take them. So guys, check this out. And for Dwight and Chef, all of that consolidation and indecision, right, at the fib, look at when everything finally agrees again. How effortless it is. Avoiding all of the indecision at the fib and then waiting for every trigger to agree again. And Snorri, you absolutely nailed the perfect entry. And what you're saying is I know that this area is likely to break because of the momentum, but my small chart doesn't support it yet. That was the picture that Dwight gave us. That was the picture that Chef gave us. And then, guys, here's the second half of it. When everything rolls and finally agrees again, that's your entry. That's how you take advantage of that momentum without getting caught in the hoopla. Let everything agree once again. Beautiful, beautiful chart. Guys, you're making me proud today. I'm not going to lie. And it amazes me how advanced my brand new users are right now. You're keeping it simple, and it's paying huge dividends right out of the gates, guys. Keep that focus. Keep that focus. When you have red large triggers and red small, but the red is above large, that's very much indecision, Snorri. So what do we see in this? We see a bad bottom, right? All that momentum came through the bottom, and it took you right to resistance, and the large triggers didn't follow through. So the gap theory takes you all the way back, right? And where you're at right now, and let's break it down into the most basic rules. And guys, I love breaking it into it. So the trend is up, right? Let me take a picture of this. I love chart reading, guys. And when you're a chart reader, these are the points where predictions get made. So this is a bad bottom, right? Which means that there's the potential that the market will continue down, but we still want to have advantages in place. This bad bottom pushes it all the way up to Fibonacci resistance that holds to the freaking tick. And the large triggers don't follow. So you know that you're not looking for long trades in that uptrend, right? And it pulls all the way back to support. And every trigger line is above that area of support that just created this giant bounce. You're just waiting at this point. You're waiting for an opportunity. You're waiting for that path to clear, either to the upside or the downside. Because when it looks like this, Snorri, there's two things that are likely to happen. Either the market continues down and hits that next key area because they couldn't do it here. That's the first option. Or the second option is when that gap theory is done and it gets to support, that the market decides that that is going to be the bottom and it's going to go up. The problem is you don't have enough information right here to make an advantageous decision one way or the other. You don't have momentum to the upside, but you don't have a clear path to the downside. And I'm going to tell you guys right now, the long trade right here has kicked my ass 1,000 times. 1,000 times. Because I say, well, gosh, everything's above support, it's going to go. And it doesn't. And it kills me. This is such a great read. And you're just caught. You have to see which way the market's going to go. Wait for that momentum to come back. And this is what it is. This price came up and triggers are going down and areas are up. And guys, it's just a cluster foxtrot Charlie going on right there. Great picture, Snorri. And then Gary, 50-50 trade with divergence. And this is the one that we spoke about earlier, right? Is when it comes from a good top, it's got a better chance. One divergence might not be a bad trade. But you didn't get a market flow signal yet. But Gary, that could have very well been it, that bar that hasn't formed yet. Price is at the areas inside of favorable large triggers. You wrote off that market flow signal too soon. That's where you want it to form. That's where you want it to form. So it looks like it might be forming. So don't write it off yet. Oh gosh, Safia, did I say your favorite phrase? I don't know what it is. Does it rhyme with Mark is awesome? Because that would be cool if that was your favorite phrase. You guys are showing some great pictures. A lot of great lessons. A lot of great lessons going on today. So let's see what happens. Not a great bottom. But it looks like multiple divergences on the smaller, faster chart. And Safia, the only challenge with this one is you're trading into the fib instead of from the other side of the fib, right? It works beautifully. But if I'm not mistaken, your rules-based trade is right there where it breaks and pulls back. rather than against the odds favorable momentum. Or maybe it was that pivot stop out there, the pivot stop out here, the 50-50. I know you have the reasons, but I'm obligated to the class to say that trading directly into that fib creates more challenges. Okay, it's your rules. Dig it. Then there was your second chance, but you had already entered. Oh, that one terrifies me. Did you? Oh gosh. Did you? You anticipated it, didn't you? Sorry, this is just me funning with Safia. But it didn't. I know you have rules and I know you're following them. I like this one. I like this one where I clear that nastiness. That's just me though. Guys, this is why I don't take momentum trades. They scare the ever-loving bejesus out of me. But look at the hold. Let's talk about that. Look at that momentum hold all the way up to Fibonacci resistance. Beautiful. And then Safia, great job. Let's take profits, right? Let's get out, make some money in the ugly spots, and just let one go to the sky, to the moon. Good job. It's not a high probability trend trade, but I'll tell you what, she's got a plan, and she nails it consistently. All right, Chris L., let's see what you got, brother. Struggle to find the strong top due to the break of triggers across multiple fibs. So, great question, Chris. Let's get some answers for you guys. Fibs happen everywhere, right? Fibs are a reflection of fear and greed. Fibs happen due to thousands of calculations. I think I shared this picture yesterday. I'll share it again. To create a fib, your T3 Fibs Pro Trader, it analyzes the data, every swing in the market, going back over a historical time frame. And guys, not just the big pivots. I'm talking if the market goes up 3 points, down 2 points, like that's a pivot. That is a projection. And it creates every one of these lines. And when it creates every one of these lines, my brother, who I didn't realize was this smart, creates an algorithm that picks the ones that are the strongest, that picks the ones that are in the highest concentration areas and stuff like that. So, um, so all of these areas create these areas. And sometimes there's an accumulation in an area, right? There's an accumulation in a price range. And this is literally a 10-point range, right? So you know that there were so many calculations over the historical time frame where the software did its magic that it could be one of these areas. But it's not an exact science, and there's millions of traders. So here, the termination condition, right? It's textbook, isn't it, Chris? Termination, no triggers through at all. Smalls. Once it creates the reversal, you have a strong top. Price reaches the fib, trigs don't break. It's a strong top. And this strong top is kick ass all the way until it hits the mid band with the large triggers fall away, a full bar away. Does that make sense? Strong tops are amazing, guys, but they're only great until that next potential termination condition. And that's why looking for the advantages in between the two creates such a great opportunity for us. Does that answer it? So yeah, if it doesn't make the next fib, that's cool. If this one's creating that termination. And it was the mid-band, Chris, because the large triggers were a full bar away. Remember when we went to tops and bottoms and we talked about it? That gap theory. So if price reaches that mid-band and the large triggers don't follow, that's when we consider the mid-band a termination condition. And that's exactly what happened here. See how it had room to make that reversal bar all the way back up? Awesome, dude. Great picture and great questions. I can't stress enough that if you're unclear on something, guys, make me cover that topic until it is crystal clear because I'll say things 1,000 different ways and I just have to say it in the way that it clicks with you. All right, Sean. Everything says up. The momentum is its strongest. That's your best shot for the long, and I love your exit. This entry down here, do you see how everything still says down, right? You don't have the momentum quite yet. The large triggers aren't going the right direction. The small triggers are against you. So you're kind of like, I think it's going to go up. It looks like it's probably going to go up. Yeah, that's it. And that's okay, but let's talk about them because they're wonderful. You had a feeling because of the termination, because of the smalls up, right? Because things are starting to change. This market may go up. And that little bit of patience gets you in at the best spot. Yeah. And that's okay. Remember that the large chart leads the way, right? It's easy to make opinions about stuff. Um, this is your high probability shot right here. And look how far that thing went. And my goal every day, and the reason that I do drill it into your heads every day and keep resorting back to the basic rules, back to that foundation, guys, is that because if you commit to it and embrace it and just make it your mantra, make it your Bible for the first 30 days, what it does is it says that there's absolutely no way on God's green earth as a brand new user that this one fits the rules. And if you write the rules on the chart, Sean, it's going to reiterate that. It's going to prove it to you. My rules were broken. I didn't have momentum, right? I didn't have a clear path. I had all these things wrong in the moment, but if I waited for them to be right, look at the potential of what I can achieve. Look at what I can make happen. Look at these trades that I can be a part of if I simply embrace the idea that momentum, a clear path, in an area inside of favorable large triggers is my best of the best. Does that make sense without sounding too preachy? Guys, this is why I say write your darn rules on the chart. Write your rules on the chart. Learn those rules. You're a rules-based trader, guys. If you're not trading on rules, you're trading on emotion. And I'll tell you what, I'm an emotional roller coaster. I'm going to get my butt kicked every day. Safia, everything says up, and you go up. And then you let it clear, and you go up some more. Nice job. Consistent. It's the same thing that you're showing me every day. Chef, you wouldn't trade this because of the termination condition. Chef, I want you to give yourself a high five. But if there were no termination condition, way to go through your rules. If you weren't into a termination condition, you better believe that's where that market is most likely to continue. Nice job keeping it on the rules. And look at you taking a short with momentum and a clear path, making a little money. Did you show me this one, Chef? Are you hiding winners and only showing me potential losers? What a great way. You know why this one worked, right? And then now you're just reaffirming that rule number 2 gets you uninvited to the party. Great job, dude. Great picture. Slow and steady, guys, every day. I'm gonna share a story real quick, guys. I like stories. I had a gentleman in this classroom, came in this classroom, and told me, Mark, your simple plan is full of shit. Pardon my French. But essentially, that's what he said. He said, your simple plan is full of beans. It's grade A baloney. And if I follow that stupid plan, I'm never going to take a trade. There's zero opportunities. So he started looking for all the opportunities, or she, let's not call anyone out, He or she started looking for every turn in the market, trying to make something happen. And guys, they found every turn, but it was the wrong turn, and they were getting absolutely slaughtered. I know, Chef. I'll always look back and see what's in the rearview mirror too. And then, guys, we went back and forth a little bit, and I'm not going to lie, this person almost quit Nexgen. They purchased software, and they almost said, I can't do this. This is stupid. It doesn't work. I feel like a fool, and I'm angry, right? And I'm going to quit, and this is horrible. And this was a conversation we had via email. And it broke my heart because I know that it works, guys. I know that the plan is a good plan. And I asked them respectfully, I said, do me a favor. Just let it be this for 5 days. You know how to read charts. Your chart reads are amazing. Let it be this for 5 days. Take that big, broad spectrum and pull it into your absolutely best chance of success. And they told me, okay, I'm going to keep it simple, Mark. I'm going to prove to you that this doesn't work. And I didn't hear from them for about 2 weeks. And I thought, oh shit, they quit. Um, and after 2 weeks, I got an email. And the email said, Mark, thank you. I'm at about 80% winners right now. And all of those trades that I told you didn't exist, it turns out that I wasn't looking for the best trades. I was looking for every trades. So I kept missing the ones that make me money. And guys, this is a true testimonial from somebody that had software, that wasn't posting pictures, that wasn't asking questions, and didn't give me an opportunity to help them. And we took that broad scope and we really refined it down to the best of the best chances. There are a million opportunities. And I'm saying this, Chef, because it absolutely warms my heart to see you not willing to trade into a termination condition. To be okay with the fact that that's not your trade and simply wait for the best of the best. Because what this shows me is that you can get paid on the best of the best. And we're going to teach you how to get even more out of it as you grow with the software. So I wanted to share that picture, guys, or I wanted to share that little story. If you're not having the success that you want to have, it's okay to refine. It's okay to take a step back and stop looking for everything. Keep it simple. Keep it simple. Because when everything says up and the path is clear and support's likely to hold, Safia's getting paid. Because she went through the study. And Safia, look at that 55. I know you're not hiding, Chef. I don't know if I said that or not. But I wanted to share that story because we all do it. Whether we want to admit it or not, we all do it. We all look for everything because we like to stay busy. So awesome picture. Whoops, and then Gene, I answered this one. Guys, we're getting close to the end. Whew. You're welcome. Isn't it funny how you think you have it nailed in and then somebody says something, you're like, oh, this just got 1,000 times better. Guys, my brother and I talk for 2 hours every morning before I teach this class, and we talk for almost 3 hours every day after. And every now and then he goes, hey, Mark, check this out. And my mind gets absolutely blown because he sees things that I don't see. And I don't always work it into my trading plan, but sometimes it helps me manage a trade a little better. And sometimes it helps me get a little bit better entry. And it's pretty awesome. So the clear path, it does. It helps a little bit, doesn't it? Just confirmation. All right. Dwight, are you with me? We're going to play truth in advertising. Clear path up ahead. It's not quite there, right? And then you talk about what it's going to take to create it. So I like the process that you're going through. Um, and guys, I don't know if you know this. I'm not the sharpest tool in the shed. Don't bother saying that, right? It can't be 50-50. So this is how I would want to see this one annotated. It can't be 50-50 because it doesn't have odds favorable momentum. Does that make sense, everybody? Because in order for a trade to be 50-50 with any chance at all of success, the momentum has to be screaming. So you know you're not waiting for a 50-50, right? So I love this right here. I'm waiting for the triggers to break above. I at least want a clear path before I look for my shot. It's a great, great, great chart read. It's solid. And it shows an understanding that 50-50s don't exist without momentum. So great picture. And I guess I did that because I want to make sure that you understand why we're waiting for the large triggers to cross rather than looking for the opportunity for entry in the moment. Um, it's amazing. It's an amazing picture. It's a great chart read. And it's a reflection of patience. And patience is hard, guys. Patience is hard. Gary, clear path. Oh, I love this trade. Guys, here's a chart read. Everything says up, strong trending market, everything's a go. And Gary takes the pullback. He says, you know what? With everything up, I'm willing to take a shot from support and manage it. Nice job. Great chart read, Gary. Just going with a strong trending market. If everything keeps saying up, I'm going to go up until it stops working. And then, Chef, you let it clear. Odds favorable? No. I hate doing this to new people. But I have to do it because it's a teaching room, right? It's a teaching room. Let's go back to the rules first. So you labeled this odds favorable momentum, right? And I appreciate that you did that because now you're annotating your charts and you're describing the rules and you're making sure that your rules line up with what it is that you want to have happen. So I'm going to go back to just the odds favorable momentum picture. So Chef, this is your best of the best, right? It's got to have that separation between triggers because when it comes back through, it becomes anything can happen. Does that make sense? And here's a very normal phenomenon, Chef, and I love sharing this, is when I look at this odds favorable momentum, I let that stay in my brain, and it'll convince me that this is odds favorable momentum here later in the day, when it's really not. You've reached that anything can happen, right? That's cool, because you do have an awesomely clear path. So what happens, Chef, is you're taking kind of a momentum style jump in trade. Um, because your entry is most likely to happen right at your first stop. Does that make sense? Your entry with a little loss of momentum is most likely to come from an area of support inside of favorable large triggers. Your second potential entry is really coming from your second stop, right there at an area of support inside of favorable large triggers. You have the advantage of a clear path. You're in an uptrend. You have areas inside of favorable large triggers. The one thing that you don't have in this look is momentum. So just jumping into that trade, you have to expect the potential for that momentum to go away. And you know that it does, like the reversal bar. So where you got in, what was your entry? Your entry was 46.75. So your entry was right here, right? These are quick profits, Chef, because you don't have the momentum. Everything says up and it's screaming. So if you enter here, get paid on a few of them. Like that's where $100 profit's super appropriate. And then the second this reversal bar prints, get the hell out of the trade because your momentum is gone, right? And once it's gone, 100%, that's where these pushbacks happen. I like it. You took the clear path. You got in. Everything is cool. This is not a home run trade. And this is a manage this trade tight as shit. Pardon my French. I'm saying shit a lot. I probably shouldn't because we're recording this. But I get excited sometimes. Sorry. Does that make sense? You're not getting in from the bounce point. You're getting in hoping that all of this just keeps going. So when it starts going up a little bit, dude, my stops are like right here. Super, super tight. And my profits from 46.75 at 48.75, I'm taking $100 on 5 contracts, Chef. Do you know why? Because if I don't have momentum and I'm hoping the market goes up, how freaking amazing to make $100 on 5 contracts, to turn this into a $500 trade and get to zero risk. And what if you only do that twice a day? Taking that everything's up with a clear path? Is it just me or is that $1,000 day? And a $5,000 week? Dude, that's a $25,000 month. I'm sorry, that's stink at math. That's a $20,000 month, right? And this is where chart reading helps. This is where the idea of momentum, where the idea of a clear path, where the idea of getting paid rather than hoping becomes advantageous. And then this trade becomes even more likely if you actually do have odds favorable momentum rather than anything can happen. Does that make sense? Yeah, Rakesh, let me give you a great example. And let me find a chart that has both. All right, so Rakesh, momentum. And guys, there's 3 different types of momentum trades that I see in this classroom. Um, Nexgen teaches 2. All right. So the first one relies on a termination, no triggers through that creates a good bottom. So the first one doesn't even count here. Not even at all. The second one relies on odds favorable momentum on your large chart and then taking, this is actually a pretty horrible picture. When the odds favorable momentum is present on the large chart, gosh, there's not a lot of great examples of that momentum trade. Let me find one that looks like it. Here we go. All right, I got you, Rakesh. Sorry. It's hard to find them in the same moment. And I'm only going to show you on the small chart, okay? The first momentum style relies on a termination. I don't have that one. The second momentum style that Nexgen teaches is when you do have a good top or bottom, you take a little stab back. So if this were a termination, this is the first one, little stab back. Momentum trades, Rakesh, are pullbacks to areas inside of favorable large triggers. Momentum is relying on momentum. It's relying on odds favorable. It's relying on a clear path. And I'm looking to see if there's a good example, and there's just not. Right here, when this creates all of this momentum, some traders will jump in. See how it breaks the one-to-one and then snaps back right to it? Rakesh, Nexgen teaches this trade. Break the one-to-one or the fib, snap back to it, enjoy the momentum on the way down. Notice that it's odds favorable, Does that make sense? That's a momentum style trade. And why is it called momentum? It's called momentum because it relies 100% on momentum. If the momentum isn't present, you can't have a momentum trade. But if a momentum entry is there, then you have to exit with a loss of momentum. They're not home run trades. Guys, these are hard to catch in the moment. These are difficult trades to catch. Safia makes them look easy because she spent the last 30 days taking 1,000 pictures. Ron makes them look easy because this is the only thing that Ron even looks for. He kept it simple. You can use fibs too, Alex. The key is the momentum. Let the trouble spot break. And if the market is just screaming, it creates an opportunity. Guys, it's a chart read. It's a difficult trade. It's a pain in the ass trade. And you're going to mess it up more times than you don't. I'm going to tell you that right now. You're going to trade into areas, instead of getting in on the breakthrough and the pullback, you're going to get in on the wrong side of it, right? And that fib is just going to bounce and kill you. But when this chart is absolutely screaming, this was Sophia's trade. Take a pullback to the fib and run that thing. Key areas. So, Sophia, Ron, all of you momentum traders, would it be safe to say that the recipe doesn't change? That you need momentum, a clear path in areas? The same skills? The exact same skills that you learn in a high probability trend trade? Is it safe to say that the recipe doesn't change? Because, guys, all of you want to do what you see other people doing. Oh, man, I'm about to go soapbox. Mute me if you don't want the soapbox. All of you want to do what everyone else is doing, but none of you want to get good at the easy stuff first. I don't want to take trend trades. It takes too long for a trend trade to happen. I don't want an advantageous 50-50 trade. I don't want to wait that long. I want to do what I see Ron doing. I want to do what I see Sophia doing, but I don't know how to gauge momentum. I don't know how to gauge a clear path. Guys, that's what keeps you spinning your wheels. So, Chef, I love everything about it, but now we're going to talk about how to refine it. If you want a momentum trade, let there be momentum. Because no one wants to get rich slow. Amen. I'm telling you guys, if you can make $250 a day every day, tell me if I'm wrong. If you can make $250 every day on one contract, doesn't it stand to reason that you could make $2,500 every day on 10? That you can make $5,000 every day on 20? No, story, I just got sidetracked a little bit. I still have to get to it. Sorry. I got sidetracked a little bit. But I think you're next, actually. Let me see where I'm at. Um, Gene, we got it. Cream White, we got it. Gary, we got it. Yep, Snorri, you were next. Sorry, I just got a got off on a tangent. So let's look at it. 50-50 trade, right? Large didn't make it. Smalls did. You do have odds favorable momentum, and without a doubt, 90-10 has the potential to break. You recognize it. You identify it. Um, so one divergence, right? Snorri, can I turn this into a completely different lesson? Don't be irritated for breaking your rules, Snorri. You're supposed to be breaking your rules right now. So let's do this. Let's start with window of opportunity. Can we all agree that that's the window of opportunity for that 50-50 scenario? Snorri, are you comfortable with that? Is everybody comfortable with that? If I'm going to take this trade, nice job, Ron. Go do old married guy stuff. Yeah, don't do the fancy stuff until you're there. So Snorri, and this is one of the things that as you grow with the software, you're going to refine your entries. You really will. Um, does everyone understand that divergence means a loss of momentum? Because this is key for the lesson. When I have divergence, I have a loss of momentum, right? So I want you to remember the idea. Why do we get in at the top of the window? Because the momentum is the strongest. Because the path is clear. Guys, that's why we take the top of the window. Because everything is perfect. Does that make sense? We're getting in at the top because everything says that life is perfect on my large chart. So what happens when we start throwing problems at it? For example, an area that hasn't broken but has the potential to break. And then I compound it with a loss of momentum. Doesn't it stand to reason that a loss of momentum could push the market a little bit further? Absolutely, it does. So I'm not saying that this isn't a trade, but I'm still saying that with this loss of momentum, the expectation is that it could hit that bottom area of support. And this is where it gets dicey on you because that's 4 ticks beyond it, right? And there's a real good chance that you would have been stopped out on the low tick and just mad. Dag nabbit. And that's going to happen every now and then, guys, especially at moments of indecision, especially at moments where fights happen. So, Snorri, I think you did this as well as you could have done it. Support held, it created a reversal. You had odds favorable. There was only one divergence. And I'm telling you, Snorri, I probably would have taken this trade as well. But I would have understood with the loss of momentum that it wouldn't be surprising to see it come down to this very, very bottom, especially with the one-to-ones there to support it. So I might have been a little patient. I might have looked for the bottom of the window, or maybe even just split the difference at the midband, but been willing to hang a little bit below that area that lines up with the area here. And then that divergence printing over here kills the whole idea of that area breaking. Does that make sense, Snorri? It was a great look. And I like this though. You said you broke your rule because the momentum was so strong and the bars were outside of the small triggers, right? What a great reason to break your rules. Guys, you're going to break your rules. Have reasons to do it. Snorri, I would support this trade 100%. This isn't one of those trades where I'd be like, oh, dude, you messed it up. I would be like, hey, Snorri, you had a termination that created a full reversal that gave you odds favorable, and every chart suggested that this market was going up. You took a great shot with a smart stop, and you got out break even when the conditions changed. I really don't know that you could have done that one much better. So nicely done. I'm always going to look for the positives, guys, but I'm going to talk about the challenges as well. Christy, haven't seen a post from you in a while. Nice to see it. And here we go. 50-50, right? Only one divergence, strong triggers. You get in, out at the small triggers, which is potential trouble, and then you get off at the next trouble spot. I like it. And you know what the cool thing is, Chris T? Have you caught my lessons on NASDAQ? If I'm taking a trade on the NASDAQ, and guys, this is NASDAQ specific, if those small triggers are a full bar away, it gives you time to manage. Getting in at the area is going to give you the least risk. If these small triggers, Chris, are absolutely flying up against it and they're on the wrong side of the reversal bar marker, that's a different look. With the small triggers so far away, I've got time to manage. Guys, this is NASDAQ specific. It gives me time to get break even from the area. And then if it does change, I've got virtually no risk or break even. And then when these triggers are super strong, I never fight them. I've got 5 on it. But I'm going to tell you right now, Chris, I don't use a 21 range for anything other than confirmation of momentum. I make sure that I'm on the right side of stuff with NASDAQ. Momentum and a clear path are 90% of a NASDAQ trade. And then you can refine your entry a little bit just to make it a little cleaner. And yours was perfect. You had all the time in the world to manage because you got in at the area and those small triggers were so far away. Such an integral part of trading the NASDAQ. Gary, I think we saw that one. And then cream white. I think did we see this one? I'm not sure. I get lost sometimes, guys. There's your clear path. You waited for it, right? But now you're giving up momentum. So Dwight, you know that you have a clear path, but you're not giving up momentum. And I don't think that one worked. Then Jose, you were actually next. 50-50, no divergence, coming from a good top. Textbook termination condition on your 21, Jose. Yeah, you were actually next. And I'm going to be Mark today instead of Mike, if that's cool. And this is this ES? So everything says down, right? And it goes right to support, and it's a 50-50. And I'm telling you, you've got strong triggers, no divergence. You take it right at the area. Everything looks great, right, Jose? So, Jose, on these two charts, all day long, man. All day long on these two charts. So, if you're going to have the information, if this chart is ugly as sin, right? If this chart is textbook termination, then this chart should be perfect. You saw room? Oh, good Lord, Jose, that is straight into one-to-ones. No triggers through at all. You had room to the fib beyond the termination, but that's textbook termination. So guys, we saw this to start the classroom, and now we're seeing it right at the end. This looks great on two charts. It really does. And if you take this loser, that's cool. But Jose, you had so much information. This said, don't you dare, right? And this has to be an indication. Four divergences in the same price range, a big key area that you're hoping breaks, and your range chart can't get any triggers below it. So you really had a couple, yeah. And you were looking at your target. You were already throwing it to the end zone, hoping that your receiver ran that way. Does that make sense? Guys, on two charts, Jose, it's perfect on two charts. I find very often that people put additional charts up, but they don't take any of the information off of them. And remember that on 50-50s, if this one isn't perfect, this one should be. And it was. That was the recipe, 100%. But if you have the information, if this one isn't perfect, let that one be. Great picture, Jose. This is a pretty reoccurring theme. This is your pattern. Getting a little caught up in the moment and forgetting to use that other chart that you use. So, all right, there it is again. Not strong top, mid band. There it is again, huh? How many times until you believe the pattern? Snorri, great picture again. Chris, there's your gap theory once again, right? Gosh. And what stinks, guys, is the first time it runs through and it doesn't happen, it's going to make you question everything that you took all those pictures of. Great job. Gary, everything says down. You take a nice one, you get out at the trouble spots, everything continues down. You take another nice one, get out at the trouble spots. Nice trading. Trading with momentum, trading with direction. Guys, what a recipe for success. What a recipe for success. We made it through all the pictures, guys. Nice job. What's happening live? Hey, there's your gap theory. There it is. So guys, here's the biggest question. With this loss of momentum, I want you to see how my brain works. Is this area going to hold? Is this area going to hold? Is this area going to hold? Right? I don't know because I don't have any momentum supporting the trade. Does that make sense to everybody? I have no idea how far it's going to push down with a loss of momentum, even with the clear path. I don't know. Let's see. Let's put a market flow chart up, and this works out because this is the only market that I have one built for. So when I get market flow questions. So let's use market flow the way I use market flow. At the first box, let me show you guys how simple market flow can be. You ready? At the first box, do I have odds favorable momentum in favor of the trade, or would I be fighting it? I'd be fighting momentum. So I'm confirming on multiple charts that I don't have momentum, right? So I know that's off the equation. So if this is my first potential area, Snorri, what I might look for, because I have a clear path, but I know I don't have momentum, and I'm just not sure which one of these lines it's going to go from, this is where market flow users, this is a quick lesson on market flow. This is where market flow users may say, let me find my market flow. There it is. That in order to look for the long because of the clear path, because everything's set up, I'm going to wait for a market flow signal. I'm going to wait for a yellow reversal bar with a green arrow underneath it from the area that's likely to hold. Or I'm going to look for, let me get to the next one, just a yellow reversal bar from the area that's likely to hold. Guys, it's imperative that your other charts say that these areas are likely to hold, right? Based on trigger line location. Or I'm going to wait for an antenna bar from the area where it's likely to hold. Are you guys with me right now? The bar structure doesn't mean anything, but if you recognize the look, let's see if market flow gave us any information. So here's our first area, and I didn't get a market flow signal, right? And here's my second area, and I didn't get a market flow signal. Look what happens at the third area, corresponding with support, a midband, and the gap theory. Joel, take care. Snorri, do you see it? There was your market flow signal. So if you were using market flow to potentially try to trade that gap theory, that was your signal, and it corresponded with a high volume area. And it corresponded with Fibonacci support that all the triggers were above. So it's trickle down, right? Large chart says it's likely to continue up because of a bad top. Gap theory says it's likely to close the gap to those triggers. At the first spot, I don't have momentum or areas inside. At the second spot, so you kind of go through it. It's okay. So, Chef, all market flow is it talks about what's happening in each bar. It's a confirmation tool, is what it's designed to be. Market flow will confuse you. Market flow will frustrate you. Market flow will absolutely decimate your trading if you try to use it before you're established in your rules. But what I was just showing here is you can use market flow. And the first way I use it is if I'm looking for a trend trade long, Chef, does market flow have odds favorable momentum in the direction of the trade? It's just a confirmation tool. And then the next one is let's say that I do have a potential long, but there's problems. Market flow signals generated at the area where the rules are true becomes a little confirmation too. So Chef, right now I'm going to encourage you, just don't worry about it. Don't worry about the market flow. Because what happens to people when they start market flow before they really have a foundation of trades, I'll show you this. This is my favorite picture. Where is it at? Is my favorite picture in the market flow section is this right here. If you don't have a solid foundation of what it takes to get you into a trade that creates a statistical advantage, this chart's going to make you crazy. The first time John gave me a market flow chart, he didn't give me any rules with it. You're welcome. Hey, Dwight, great job today, dude. Thank you. And I'm going to tell you, Chef, it was hilarious. I took 123 trades that day because every time I thought I saw a signal, I took a trade, and I didn't trade it with rules. I just took the signals, and I got run over like I was getting paid to do it. And it was on simulator, and I think I lost like 20 grand on a two lot. It was amazing. So focus on those rules, and then once those rules are set, man, we'll work together, guys. I'll always work in this class on market flow to help you understand how to use that market flow to gauge those advantages and really take advantage of it. And that was a great example that Snorri asked about. Was there some way to determine which one of these areas was going to hold? Because we knew that it was probably going to be one of them based on trigger location. And market flow gave you the shot right here. And market flow signal corresponded with the close on the correct side of the small triggers. So it was kind of cool the way it all worked out. Don't be in a hurry, I promise. I'm not going anywhere. We're going to get there together, guys. All of us will. But let's walk, and then let's crawl, and then let's run. And let's build plans that give us examples. I'm not. Ah, that didn't work, Bobby T. Let me try it again. Yeah, for sure. And we'll do it every day. And guys, you know what's cool? Oh, Bobby. Not a good bottom. So you take the pull back to the mid band. Maybe a little aggressive. Maybe a little aggressive. But you're willing to take the shot, right? Because everything's turning. And way to use momentum to get to the fib, Bobby T. Nice job. And guys, in about 3 weeks, I'm moving back to Texas. 4 weeks, I'm moving back to Texas. So my day won't start at 3:30 in the morning anymore. It gets to start a little bit later. So you guys are in trouble when I have a little energy coming into this room. Right now, I'm sleepy. And then Jose, momentum style. I love it. Check it out. You let it break and you take the pullback. And then you get out at the trouble spot. And then Jose, momentum in, it's got to be momentum out. Remember, man, these aren't home run trades. I'll swing down to Rockport. You take me out on a boat? Take me fishing? I'm there, dude. You know, I've got one of my best friends, kid I grew up with, known him for 40 years, Bobby. He's a marine mechanic, owns his own business, loves it, used to race boats, super cool guy. And he puts together boats, yacht, all sorts of different things. And he sent me a video. He was delivering a sailboat down to the Keys, and the owner just said, just sail it from Texas. So he sailed from Texas to the Keys. Um, and it was awesome. And he had a video of about 50 dolphins on the bow of his boat as he's going down through this crystal blue water. It was amazing. Big Al, I am going to Texas initial or to Austin initially. I've got an Airbnb for 6 weeks there. My wife is interviewing with about 5 different hospitals. So we're going to end up either in Austin or Dallas is what it's going to be. We don't know what the permanent's going to be. But when I'm in Texas, guys, if you Texans are near me, let's get together for golf or some barbecue or something. Um, and then Jose, momentum in, momentum out. That's all I can say, man. Momentum in, momentum out. Get a little extra out of those trades. And then Safia took the same trade. Let it break. When it pulls back and goes up, absolutely beautiful. And then there's that. You see it's losing steam a little bit. Great job, guys. Awesome class today. Did you learn anything? New folks, does it get a little easier every day, I hope? And it's going to, right? The same way I'm committed to giving feedback, you guys get committed to asking for it. And every day it gets easier. Keep it simple, keep it focused. I'll be back tomorrow morning, 9 a.m. We're going to do it again. I love being here. I hope you enjoy it as well. Stand up from your computer now. Go walk around. Take a deep breath. You've got 3 hours worth of eye strain going on. Go relax for a second. Go pet your dog. Say nice things to your spouse or your girlfriend or your boyfriend. And I will see you guys tomorrow morning at 9 a.m. Be good, everybody.